All right, good morning, everyone, and Happy New Year. Okay, how you all doing today? Everybody's good? Starting a brand new year. All right, can you see my screen? And I know you can hear me. All right, excellent. Okay, so let's do this quickly. Okay, brand new year. We're stuck in this trading range, as you can see here. But we broke out from this triangle and then came right back down after hours. Okay, so we broke this trend line of the upper triangle and went back into the apex area and found support. I do have resistance up here that we might actually go and test, but this is also a trading range top. Now, I did have this right here, and we have arrived to this early resistance. So I want to see what the market is going to do at this trading range. It has been coming back here. I'm going to try to redo this area a little bit now that we have more information. I might take those tops. So we came down and we tested, and we're just going back up. I think this is where price is trying to go. Above that, I also have another area of interest. It's a breakout test area. So I think the bulls might push, but we do have 1, 2, 3 here, or 1, 2, and then we're going to make a third push up. Okay, so, and then we're going to have 1, 2, and maybe the brand new higher. So we have a couple of 3 pushes possible. We already have 3 pushes here, and we're getting rejection there. Bears might want to get another leg down. That could put us back into this triangle. Okay, if that's the case, then I'm going to look to see how market is going to handle this balance zone, this trading range. If we do break below it, we come back down. Okay, so the support, and most likely to break and go further down. All right, so I'm going to switch gears and go to, just give me a second, please. Close that, yes. Okay. All right, let's take a look at what is happening monthly. All right, a little bit more. Okay. So we've been in sideways for 1, 2, 3, 4, 5, 6, 7, 8, 9 months. And you can see that this is the trading range. We've tested this breakout point, which is right there. Okay. And we bounced. Bulls might want to have another leg up, but the problem here is this right here. So bears are trying to get another leg down. We're smack in the middle of this trading range, okay? And so market is deciding here. Bears want to continue down and test the October lows, okay? So, and maybe break this area and maybe come into this area, okay? So that's what the bears want to move and maybe get a measured move down. But we are so in such critical area here. We do have a 20 moving average up there. So I think the bulls at least want to get back up there. Now, if we do get some kind of a lower high and we cannot get above this, you know, we could continue to come down. So you could see that it's critical because it could also turn into a head and shoulders pattern with this area that bulls want to break. And if we do such a break right there, right, so we have a double top there, we could still get some kind of a lower high because what bears see is some kind of a bear flag. So what they're looking for is maybe get up above, get some kind of a lower high. We already have double top, or maybe go up and make a double top here, lower high, and then come down. So I don't know, but I want to take a look at the weekly. There is a lot more information there, right? So we have, you can see that we are in a trading range. Need a little bit more info here. All right, so here we go. We have a channel coming down, and we have the trend line. Bulls may want to go back and test this trend line. They're trying to get above it, but again, we are below the 20-week moving average, right? So that to me is magnet, and the 20 did not cross below, 200. So we could actually go up there. Now, again, I think the bears are seeing some kind of a wedge bear flag, and they want to come down and test. So we'll see how this goes. Let's see on the daily. Friday was interesting because I said that we're in the buy zone. Watch, because this bar we're bearish. In fact, it was right around here, and I kept saying, watch this midpoint. If we don't move below it, we're just going to test, and then we're going to bounce, and at the end of the day, we could actually try to go back up. So, yeah, I mean, we ended up going up to this area, right? So, I think that was this bar. Hold on a minute. Nope, this bar. I was right. So we did an buy zone, created buyers. We ended up closing higher. So that was a good news for bulls. I expected more bullishness, at least get in here. If the bears are going to sell, this isn't the place to sell. This is the place to sell. So you can see that we barely touched the EMA, right? So that is a 20-day EMA. But we did test in a way. So now if market wants to sell, these areas are my targets for bears, but they're going to have to do a lot better than this. Like today, if they want today to be a bear day, they're going to have to come all the way down here and break this. So let's see, we have double top here, but we barely touched the EMA. So I think it's better for us to go and test above this, okay? So I'm not that bearish, but we'll see, okay? So I don't want to sell just now because market I think wants to push up a little bit further, at least to test the 20 EMA and above a little bit more. So I'm going to wait to see what bars are going to look, the first 6 bars are going to look the open. But anyway, so I'm going to remove all of this. We don't need it. So you kind of got the idea that we are in a trading range and we are now at the sell zone and they're trying to sell, but I think it's a little bit early. We are also at the little above the 50% of this entire, move up, but we're also in a trading range and we're right at the 50% of it. So if we stay above this 50%, this is where the bulls are trying to go. You can see that this area. You can also say December 6th or December 7th low, somewhere around there. I would say let's get the average area. So this would be the target for bulls, so we could keep pushing higher. Now, if the 20 EMA somehow crosses above the 50 SMA, we become a lot more bullish, and the market could continue to push, to not only here, if we can get above it, which we're going to get rejected most likely. These are the areas that the market is trying to reach. So I'm not ready to sell. I think we're going to try to push higher a little bit. So let's take a look at the weekly. I'm sorry, well, it is weekly, so this is the last week's range. Last week was 4 days. So the 27th, the 28th, 29th, and the 30th. We are testing above last week's range high. This is the sell zone, so I like to see a little bit more push to the high. But we can trap the the bulls, because we have such a gap here. Bulls are trying to close this gap. So they closed it a little bit last week, but it is open. So we not only close it, and I'd like to see bulls actually test this area. You see there's this tight trading range. We might even test well inside this area. Once we do that, then I'd be happy to look to sell, but let's see what happens. Now, can we actually trap the bulls above this last week's high? Now we do have 1, 2, 3 push. I would like to see some kind of a sell signal right around here. We are running some stops above this trading range high, but I think I'm going to give bulls a little bit more space here to see if they can close this gap. Okay, this is what I'm eyeing for them to go and test. 4,000 is round number, but it is way too up above. So the 3,900 is what I want to see market, if the market can get there and what they can do there. Okay, we do have news, could act as catalyst. It is scheduled, give me a second, 9:45 PMI manufacturing final and the construction spending at 10 o'clock. So we're only 10 minutes away. Let's see, I think the bulls are trying to close a bar above 87.75. If they can do that, then we will go test 93 area, 38.93. But I need to see that bull body close first above 87.75. Okay, so let's see if the bulls can push this. Now the Globex is range, it's rather large, but we are above the Asia and the midnight open, so that makes us a little bit bullish. I don't like this because it looks like a wedge 1, 2, and 3 push bear flag, but flags any pattern can fail. You can see that we're way above this projected target from Friday, so I'm going to get rid of everything. We no longer need it. We are, however, gapped up, okay, at the open. Not a strong bar 1. Bar 2 hasn't closed yet. There's still 3 minutes. There's time. If they do close, if the bulls close that bar 2 on its high, that would be good for the bulls. 2 bull bar. Okay, so we would end up going higher. We're way above the high of yesterday. Now, what's here that could cause a problem? Well, this is a trading range high, and we're way above it. Okay, there's 1, 2, and 3 push. Okay, and trading range highs we're testing. If the bar 2 closes as an it's already overlapping greatly, but if they close a bear bar and it overlaps with the lower wick of bar 1, then I'm not going to be interested. I'm going to wait for what the next bars are going to do. We could still break out. We could have a small trading range here, maybe a 2 bar, 3 bar, and the bulls can still buy and bring us up to the Globex high. So we're kind of in the middle, slightly bullish. Okay, so I don't like the fact that the daily chart is only showing me a failure to test, like maybe a point or so, test the EMA. So I think we're going to test above the EMA on the daily chart. So let's just wait a little bit. I am quitting coffee this year, everyone. Don't laugh. It will happen for me. I'm very adamant. I'm actually drinking in ginger and green tea right now. So here we go. That bar closes like that. That's good, but it really needs to close that way. So it's activating all the buy stop orders above bar 1. And we're pushing, and that's why I didn't want to sell. I think bulls are going to try at least getting back up here. So let me see. So 3,910 is slightly above the EMA on the daily. 3,910 is right inside the sell zone. So let's see if the bulls can. We already have an outside up bar on the Globex, so that's good news for bulls, but they need to close that bar up here. to continue to this area. This is not a good sell zone, okay, right here. However, this is. So this is the area at least I want to see bulls push. We have a breakout and a slight gap up is from the bar one high. But the news in less than 5 minutes, we should push a little bit higher to 38.9375 or 38.94. Turmeric, yes, I actually found the recipe is how to make a really nice tea with turmeric, ginger. There was also apricot, dried apricots. So I'm going to try that. Go Bulls. All right, so we're pushing towards higher. That's good news. We expected it. Great for the belly. Let's not talk about my belly. Now it's like, what belly? What do you mean? Have we met? I'm just kidding. Yeah, I do get these sometimes. I used to, but you know, after the surgery, I no longer get any belly problems. But turmeric is amazing, especially with some jasmine tea. And I don't know. I know I'm lying to myself. Hopefully, I won't go back to coffee. I'm trying to excite myself about the tea situation. All right, here we go. We're getting towards the area I'm more interested in for bulls to test. Keep going. Belly is important for us Turks, right? Irfan? This conversation took a hold of a turn. Can we get back? All right. There it is. But I'd like to see a little bit more. Come on, bulls, push another 10 points. That is profit taken with bar 3. That's because they have reached 20, even 30 point at this area, but they can actually push even further up to the 40 point, which is right around, I said, 39.10-ish, right? So this is what I want to see bulls do. Keep pushing and don't give up, but look at it. This line right here is actually an extension, breakout extension of last week's range. So it is normal for market to stall there because it's also closer to the sell zone, but I like to see a little bit more push to the upside. But if you want to take profit here, take profit because we are at an area where bulls would definitely want to take profit. Now, I don't have much information here, so I'm going to add a little bit more. Let's do 20. Okay, so here's news. So I'm not trading on flat. I'm not going to take a chance with news, but it's really nice bull leg up. But I don't like the upper wick, so they're taking profit, like I said. You see, we're right on that line. We even went one tick above or so. So everybody, alt machines are taking profit there, but I like to see more continuation into a 39.10. We did test a little above 3900. I said it was a magnet. I would like to see continuation for bulls here. All right, less than half a minute for the news. This could be just a pullback, okay? Or it's going to become a trap. It looks like a trap at the moment, but we don't know. It could be just a pullback. If the bulls actually fill part of more than half of this upper wick of the sell signal bar, then the sell would be eliminated. But it's news, so it's news bar. Everything's 50-50. I'm not going to take a chance here because we are right at the highs. And if the profit taken, if the bulls get spooked here and they start to take more profit, more bears could jump in, okay? And then suddenly we come down because this is a sell signal bar now after all. They close that bar 3 is on its low, call it a shooting star, okay, demolished star, I don't know, whatever you call it. It's basically a sell signal, and now you're getting this. And bears could be trying to get a head and shoulders pattern, okay? and then sell further into is the high of yesterday and come down and close this gap now. So I did not linger up here. It was just too high. It was already 30 point. I wanted to see them get to the 40, but it's news hour. Things can go different way, and I just need to take a, step aside and just wait a little bit. We have an inside, outside, inside on the 15-minute chart. Okay, and like I said, bears are trying to get a bear flag, and they did see the wedge 1, 2, and 3, right? So they're trying to get a breakout to the downside. Now, we don't know if they're going to be able to get that, but good rejection at the highs. So I did say that I was more interested in here, this area as a sell. I was not interested in there. They have tested above that double top, okay, ran some stops, and now coming down. Now I'm interested in for bears 38, 65, 75. Okay. Let's see if they can first test the Asia high 71.75, and then they can push it towards the 65.75. See if we can actually test and move underneath 72, 38.72. We should test it. We're almost there. And then the 38.67. So I ended up selling and scalping. I want to see, now I have a runner for the 65.75. I want to see bears close the small gap right here. But I'll be quick to get out if it doesn't go my way. So we should continue to sell now. This is very good. This is now a trap, definitely. And we have a major, okay, 3-bar, it's a multi-bar, 1, 2, 3 bars, okay, reversal. And they just closed the gap. Now, what the bulls want, a double bottom, okay, and a gap open to EMA and swing it back up. So they want to reject this, right? But if the bears able to close a bar below the 38.65.75, we will come down to here. This is what the bears are interested, at least, right? So, but I need to see that bear bar, not only testing the 65.75, also move down here. Now I need to test something here. Yep, so that's good. So I want to see if the bears can do this. If they do close the bar above this gold line, which is Asia high, I will be exiting. I will be exiting my short, but we should get a little bit more. There's still 9 minutes, almost 9.5 minutes. There's another news coming up, 10. I'm going to see if there are any limit sellers here. This could come down. Let's see. I don't see it yet. So we're getting an inside bar here. It's because bulls want to have a double bottom and then keep the gap open so they can go right back up again. But I'm more interested in what will happen on the higher time frame at this point. If that bar does not close below this area, I am no longer interested in these two, and we could just go right back up again. And that would become a failure to break out for bear flag, okay? But I think the bears are trying to at least get down to here with this leg. So there's still 8.5 minutes for that bar on the Globex to close, and I think the limit sellers are here. They can bring us down to 64, 38.64 area. Might even come down to 62, 38, 62, 50, 63, 50. It's very important that this Globex bar body closes below this gold line, and then this is the first target, 65.75. I like to see on the 5-minute chart continuation to the downwards. Okay, I'm calculating here. I'm selling this, so I'm going to try to scalp around first, let's see, 65 area, 66, 65 area. It could bounce there briefly, but ATR is so big, it's going to continue into 62 area, 38, 62. So if you want to hold on to it, EMA is also magnet. So there it is. So this should be where I'm highlighting is target now, but you should be on a runner right now. So you should have taken profit somewhere around 62 where I said, and then maybe leave a runner due to ATRs being too high. We could get a drift down here. So we have met that target. Good job, bears. Bulls kind of gave up here. This bar 4 is a gave up bar, okay? They got trapped. Good sell signal, right? I was really hoping we could get to the 40, but it wasn't in the cards because of hourly chart. That's why I have these levels, okay? I watch this happen every day of last couple of years, so I kind of know what to expect, right? We closed the gap, but we really didn't close the gap, to be honest with you. This isn't a gap close, right? Wick, to me, is not an actual gap close. Some may argue it is. I like to see actually body going up and closing up here. Then I would say that's a gap close, and the bulls can still continue to go up to maybe to this area and then come down. But that didn't happen. But at least I expected this right here to be tested. Now, can the bulls still take over? Well, let's talk about that. They have to prevent bear body closing below 65.75. Or even if they come down to where I'm pointing, we have to bounce there very heavily. Now, we're right now pushing first push, first pull back, second push. Maybe we second pull back and then start to swing down. So I don't know if the bulls have it anymore. This is now becoming bearish. So more bears might try to sell here, looking for continuation. Like I said, drift down maybe another 10 points or so. So let's see if they can do it. But we are above the EMA. Bulls still want this kind of a double top. Okay. I'm sorry, double bottom. What am I saying? Double bottom. But this is way too lopsided to me. So I need to see this come down a little bit more. So there you go. More selling. So this is your runner. Now I would say you can still hold it all the way down to 38.52. I said another 10 points they could come down. Possible 38.52 area, maybe even 51. But at this point, we just tested the EMA, so I'm done. This is, I said we're going to bounce, so I took profit. Now, if they do close this bar, bear bar on the Globex chart below where I'm pointing, okay, that dotted line, gold dotted line, Globex low is going to be the next target for bears on the 15-minute. So they have about 3.5 minutes to accomplish, and we could still drift into 38, 51, 52 area. This is great. I am very excited about this. I mean, I pretty much made my daily income right now, so I don't have to trade rest of the day. This is what trading is all about, right? So you have to read, you have to be at your desk early, right? Just give yourself at least 45 minutes, settle in, read the report, you know, on the website, the BTC website, brookstradingcourse.com. Find your levels, see where you are, if there's a trading range, and are you above the trading range? Are we gapping up? We are gapping up, and you know, this continuation didn't go too far, so we couldn't even get that target. So it's becoming a trap for bulls at the highs. Now, what if I can look for a bear target? This is the target. This is where the bears are trying to reach. Possible. Or you could say, well, there's a gap there. I can actually get a much better target, so I'm going to get this instead. Yeah, sure. You could do that. Or stay conservative. You got 1, 2, 3 bars. This is the first target. You need to scalp there, 51, 38, 51, like I said. That's how I found it. Happens to be also a 40-point take profit. So this is a mini trend in a way, but I think the bears are trying to get 80 points at this time because they came down so fast, okay? Chances are they're going to bounce here. They're going to take profit at the 38.51, will bounce, but they can still continue. Now, how did I find this? What I see is 1, 2, 3 bear bars, same color, identical colors with a huge gap in between. Okay, last bar and the second bar, or the first bar's low. So what I do is I take my risk reward. Last bear bar's high, I'm measuring the gap basically, and I'm putting my stop. So that's the target. That's your measured move, gap measure target, but it's a conservative target. Now you could also say, hey, there's another gap here. Maybe I can, there's a breakout and a continuation. I could get a much better price. So I think I'm going to take this. That's your continuation. You don't know if you're going to get that. So first things first, okay, measure that and go for the 51.75 or 52. All right. I think the Morgan is in the wrong place. If you're in Discord, sorry. We are having fun here, Morgan. I don't know what kind of fun you're having. But anyway, so let's get back to the price action. We closed below right here. That's destruction. I need to do something. I'm going to minimize this Discord a little bit. All right, so we did close below where I pointed out on the 15-minute chart. Now, this is a pullback. I think we might continue to push a little bit, but what if this is an inside bar also, but I think the bears might continue to push here. However, as big as that bar gets, there might be some buyers above it. Now, do you want to buy against 4 bear bars? It might go and test this gap areas, okay, but I think we're still going to continue down a little bit. Globex low is in the vicinity, so all right, I need to give the team the stranger danger alert. Hold on. So I'm going to expect a little bit more continuation. The 51.75 has not been tested. 75 has not been tested. The first trading day of the year. I'm just trying to restrain myself from joking. I need to stay professional. ATR is big, so you're going to get these pullbacks, just about 12, 13 points minimum, and that's what you're getting. But that doesn't mean that we won't continue down. We have a little bit more room to the downside. 38, 50, 38, let's say maybe like 48 area we could still test. The fact that you guys are trolling the troll is just too funny. Watching you guys. it's a tough crowd here. Come on, bears, you can do it. Just keep pushing downwards. I want to see, but you see how we gotten so close to that conservative measured move target, and then we immediately bounced. You know, finding targets are a good thing, but doesn't mean you're gonna get it to the tick. Most of the time you will, especially something conservative like this. But even then, you know, it comes closer. Bar 6 actually closed strongly below the EMA. So bears might be looking for a bear flag. It has to go up to the EMA because that's where the average price is. So if anybody wants to sell, you're selling into this breakout point, there's not much room. It's better to pull back a little bit. Okay, so can the bulls actually go and test the bar 7 high? They could still do that, but there are a lot of bears sold the close of bar 6. I'm not sure if we actually tested one tick below. We did not test one tick below bar 6. There are also sellers there waiting. But when you move underneath EMA like this, you want to see a little bit of pullback. And if you're going to sell, now we have 2-3 bars overlapping. You might want to sell the pullback instead and take some profit, maybe leave a runner. Profit, maybe leave a runner. I like to see bears come down to 38, 49, 50 at least. I want to see continuation into Globex low. This is a good swing for bears. So I'm going to take a look at, let me check something for you all. We have an outside, we have an inside bar. We have an outside bar 6, and now we have 2 inside bars, 7 and 8. So it's II. Well, 8 hasn't closed yet as an I, but basically what you're looking for here is some kind of a breakout or breakdown. We bounced from the low of bar 6 slightly, but if we do break it, come down to here. So we don't have that breakout yet. Now, can the bulls actually take it over and we go all the way back up to 38.71? I'll talk about that if we do get a bull bar closing above 38.60.50. Right now we have is outside, inside, inside. So I like to see some kind of continuation for bears, but I'm prepared that if we are trapping the bears here, which is unlikely, I'm still prepared. I'm interested in the Globex low for bears or the test of the Asia low. It would be better if we bounce, if we trap the bears here and then bounce upwards. So even though this looks like holding the bears here, it's just looking for a limit sellers, I think. All right, so we're testing a midpoint of bar 6. Bulls are trying to close above it. If they fail, we could come down very quickly. If they do close a bull bar, then we could go all the way up to the top of that high of bar 6. I'm not buying this. And for measured move, this is the target for bears. And this is the scalp target for bears. So they need to close that bar on its low as possible, as bearish as possible. And if they actually take out, okay, the bar 7 low, 1 tick below, this will become inevitable. So this will become the target. But if we start to close above inside bar 7's high, then I'm going to look for bull targets, scalp targets, okay? So I don't have anything yet, so I'm still on hold waiting. All right, so we do have a midpoint close. That is good for the bears. but it's not the close I've been looking for. So let's see, we need, okay, so good. Bar 9 now taking out that inside, so this is a breakout mode. I said we're trying to break down, right? And if the seller is already selling underneath bar 8, by moving the stop order from under 6, under 8, they already got activated. They might have scalped with bar 9, which is good enough for a quick scalp. You can measure it, right? That's more than 2 points, so that's good for the bears. But then again, ATR is too big, so it's kind of expected to have that kind of quick scalp. Now, bar needs to close bearish in order to continue down. If it doesn't, then that means bears get trapped here with bar 9. And you generally get these traps, okay, if you actually measure bar 6, okay, so you get this trap. You want to see a bear bar closing here. But the way that I measure, okay, you see that, how this is a trap? I said minus 1140 to 1140. If I have an outside bar and I have an inside bar and we finally break, okay, but the body closes inside, and this right here, this isn't a breakout. See that right there? That's a trap. From here to here, it's a trap zone. So I don't sell something inside. You can, but if you do sell, say you trailed your stop order from underneath 8, you sell it, you need to scalp. Remember, 1 point is what the machines are going for, but the ATR is so big, you can go for 2 points. So the machines know that they can get 2 points. Instead, they got a 3 point or 275. So they got it. They got their money's worth, but they want to close the bar because they can make a lot more. They got a measured move target. They got the first target. If they close below this line, they're going to go here and then down here even. But first, right, market is always, other machines will always try to trap these bears selling early. See, now that closes, it comes down here. So this is my target. So we have a breakout, but again, you want to see the solid body close below bar 6. So we have met my target. I scalped here just in case if we don't go further down. I said we're going to come down to 38.50, 38.49, maybe even 48, right? So 48.50. So I took a little bit just in case we get trapped, but I do have a runner coming down towards here, maybe even 1-to-1, okay, 1-to-1 of outside bars range. We could literally shoot down here very quickly, but first things first, right? So good for the continuation. Globex low is your target now. Good job, bears. I'm going to try to find some charts for you. So just give me a second. All right, take a look at this right here. Measured move, coming down, and then somewhere here, this is support, so we could start to actually go right back up. Now that's one. We got trapped. Everybody came down, but we ended up going sideways. So let me take a look more. This is always in short, okay? We didn't get that right away, but now we have it. I think we've become always in short up here. But we're testing this breakout level. So there are limit buyers here, you can see. Sorry, right there. I like to see a little bit more continuation. So basically this is spike, pullback, channel. I like to have 3 push wedge, then go back up and then maybe get another reversal. So that's what I'm looking for. So I like to see more to the downside move. I'm not ready to buy anything. Now, if this breakout fails, We could still go up a little bit before coming down, but I'm waiting for this bar to close. If it closes bearish, we should come down further. All right. That's nice. Go, 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 go. We're almost there at the Globex low, so you should be holding on tad little. Very good. But it's going to bounce here a little bit. My goal is to see and really take profit at 38, 38.50 or 38, say around at 38.39. But it's going to bounce here. That's why I highlighted this area. We met the measured move, okay, and we have a buy zone here. But there's no bull bar yet, okay, so you can't just buy blindly just because it hit a zone. It could still drift further down. Bears are swinging this further now, okay, so you can even get your measured move target from the Globex chart. We still have a little bit more. That's why I said 38.39. I think we might test it. Can we bounce very strong right here and the bulls actually prevent a breakout to the downside? Yeah, they can. I have seen price actually testing the Asia low and then bouncing very, very hard to the upside. But I want to see a little bit more drift because we have a little bit more room here, 39.25. I didn't zoom in as I drew this, so it's not the most accurate, but you could see that we're already about to test it. So this is good for the bears, but profit taking is you need to get ready now because this is going to bounce. No bull bar, so I can't really buy anything. It gapped down from the EMA, but we do have to pull back because we gapped down quite a bit. Now, we could still sell this, but I'd like to see a little bit of pullback to this breakout point, bar 9 and 10. Limit order sellers are most likely to be there to sell it down. Now, I am expecting a pullback there, but I want to see what the bulls are going to do. Are they going to breach this area, or are we going to sell? So ATR is 975. Okay, so 9, so that's 4.5, just about 475, the first scalp, or 450, say, rounded. But I like to see first this area touched, okay, 46. It might even breach above it, but there are sellers waiting there, scalping machines. Sometimes it doesn't reach there and then sells quickly and then gets down to the target, like it could sell 10 points. That means they're keeping some kind of gap open and they're continuing to sell. So I'm looking for maybe a breakout, 1, 2, another third push down. So this is profit taken. Some bears are covering their shorts, but we might sell another leg down. So if you have taken profit because we met the Globex measured move target, that would have been a good idea, but I want to see a little bit more down. I'm going to check something else here. Can the actually bulls show up here and then we suddenly start to swing higher? Well, we'll see. This is bearish at the moment. It's rejected. And you can see this is actually a head and shoulders pattern, okay? If you go to maybe a 3-minute chart, you could see it, or 2-minute chart, or 1-minute chart. You can see the complex, okay, shoulder, but it's there, and another right here. So they actually broke the neckline, right? So I think this might be done maybe. I mean, if the bears are done here and they don't see any room to downside because we have maybe to here, I would like to see price actually come down here before swinging high. So that's why I said I think we have a little bit more room to the downside. I'd like to swing this higher and reject all of this. Believe it or not, we could get that kind of move, but it is right now very bearish. This bar 8, big up, gap up at the open, and then gap down all the way, okay, below EMA. So it's confusion here. Ton of bulls are stuck up there, most likely. They already show us that they're buying, okay? They started, they were buying, they might have bought here thinking this is going to make a double bottom and go. So they might buy here, they might buy here. You see right here, they might actually double whatever they added here and there and hoping to get back up to here at least. But first things first, some machines are going to sell here. Now, if we get the third bull bar, okay, you see how they're selling right now? So I'm looking for ATR came down significantly. It's 5 points. So one time ATR is right there. That's their scalp target. Can they make it? I don't know. It came down so much from almost 10 point to 5 point. At this point, they might, but I'm expecting maybe a rejection and go back up. So we don't have a bar closing below the Globex low. A bear bar is, if that's why I said, if you cannot close here, there's a chance of these bears taking profit, and then we could actually reverse back up again. Now, I think this is very strong. Even if we go up, I think the sellers are waiting there and they can swing down again. But it needs to pull back up if this is too low to sell. So scalper machines, they're selling scalping. That's half the ATR. You actually measure, right? So right there, 225. That's half the ATR they already scalp, but they're not very happy because they're struggling. Now, if this bar actually closes bullish above 38.46, I'm going to be done with my shorts. But I see the bear machines are still scalping. So that's good news for bears. But if this bar closes, then you have 3 bull bars. This one gapped up at the open, 27. I'm sorry, this is actually a 2-minute chart, but it doesn't matter. It's the exact same. See, I get around whatever the chart I'm on. I don't care. If it's 2-minute, 3-minute, 5-minute, I'm going to trade exactly the same that I trade on the 5-minute. But you see this gap up right here between the 26 and 27? That's kind of showed me that I don't think the bears are going to be strong here, but we'll see. But I want to get back to 5-minute. I just wanted to show you guys this is a head and shoulders, and it might have already sold a lot. All right, so they are selling here. ATR. See, I thought that I was on the 5-minute, so ATR is still actually healthy. That was the sorry, I misread the ATR there. The 2-minute ATR is lower. It's going to be always lower than the 5-minute ATR. Now, the 5-minute ATR was around almost 10 points, but it did come down, but it did not come down to 5 like I said earlier because I thought I was on the 5-minute chart. So if it's 896, that's 875. Half of 875 is 450, 425. Look, they already made 425. That's half the ATR scalp. But what bears want is 1 time the ATR. So take out 875, take out 2 ticks, 825. Can they come down here? They need to close this bar bearish, or they need to accelerate selling here if they want 1 time the ATR. If they cannot, which I'm sure they will, that's not that far away. But if they cannot, and we start to see this bar 12 closing bullish above the 46, I'm going to be done with bears. And that kind of translated to 2-minute chart similar. So you see there's not much of selling, but they're still scalping. So I'm going to wait. This is how I take my time and wait. I don't jump in buying the first bull bar I see, because I think this is trying to come down another leg. And the bears are trying to close a bear bar below the Globex. So as I'm scalping, this is what I'm expecting. So ATR is down 9, take out 2 ticks, right? 850. So you can either leave it at 825 or 850. That's one time the ATR the bears are trying to get. So I'm going to leave a little bit more room for bears to finish this job. This is how I hold on, clicking buy button quickly, thinking I can pick this bottom. Okay, so I'm not going to, because these bear machines are still selling the breakout points. But it's a trading range, you can see. Might be wanting to come down and test this area, but I don't know. I don't see any acceleration. All they got is half the ATR. They can't even get the full ATR, so that's it. Now they're getting it. Okay, so the bears are like, no, we're going to get it. And generally, you have about 3 to 4 bars to finish. Okay, you have about 3 to 4 bars to make that. Okay, so here's 8 points. It came down significantly. So I'm going to be conservative, take out 2. That's the new target, 750. You have to keep calculating that. Okay, so they're still trying to finish the job because it's only been the 3rd bar. But once the 3rd and the 4th bar I see and they still haven't met their target, scalp target, I'm out. That's too much time. And we could, in fact, reverse. Or we're going to not only get this target, we can actually double it. So there you go. That's it. Look at it right there. As soon as it hits, that target goes up. But the ATR is now larger. It's 9. So 925. So here it is, 925. They hit 925, maybe didn't. Nope, 1 tick above. And it's bouncing. So the bears are scalping now. But if they do close this bar bearish on its low, okay, that's another flag for bears. So flag at the EMA, flag under the EMA. We could have another leg all the way down here to the low of yesterday. But I'm still watching. I don't see a bear bar yet below the Globex low. There might be buyers buying below the Globex low due to these legs up. Okay, so buyers were there before. Buyers were there before then. So we know this area, buyers are there. So if the bulls won't allow a bear body closing beyond or below the Globex low, and then we start to get above 38.46, this breakout point with bull bars, that's when you know we're going to pull back to the EMA, possibly with 3 push, and then get a wedge bear flag, much bigger structure. Then maybe I would look to sell that, because that would be spike pullback channel down, and a pullback up, okay, with 3 push wedge, okay, test that spike pullback area, then I would love to sell that because this is too low. So there you have it. Bear machines are now scalping and getting out, and the bulls are sidelined. They're watching. They don't like this, but they have been buying here. They have been buying here. They need to see a failure of this leg selling. So can we actually drift further down? Yes, we can. And we seem to be doing just fine with bears. But it's not doing what it's supposed to do. It's not accelerating, okay? So if we're going to pull back, I'd like to swing this one more time. Swing down. So if the bulls are now saying, okay, this isn't a good place to sell, it's just too low, let us get up here and then sell. Sure, I'll take that. That's a much better entry, the higher price, and I'm marking it down. But you could see how machines are getting what they came here for. So that was a good demonstration of how to scalp. Bulls are looking for high 2. Pin bar, we're right at the 50% of it. They need to close this bar 14 as bullish as possible. to get back to the EMA, or have a double top with bar 10 high, possible double top here. There's another breakout point right there, so we know similar scalp that we had here we could do again, but can you buy above 13? I mean, it's a weak bear close, so most likely there are buyers there. And the stop is not so far away, so you can take a chance, but I'd rather to see a bull close. We already went one tick above 13, but I want to see this bar close first. You can see buyers are showing up at the lows and not letting go yet. If this bar closes bullish enough, there will be bulls pushing this, but bar 10 high is a perfect place for a double top below the EMA to get a double top bear flag rather than a wedge. Now, that's fine. We could still make the wedge. So what happens is you're down, you're up, you're down, and then you can get the wedge. Okay, so bar 10 high can still act as a double top place formation, and then we could come down and then get back up again. So I'm waiting how this bar is going to close, bar 14. Yeah, any other news today? Let's see. Nothing for the rest of the day. Tomorrow, though, 10 o'clock ISM manufacturing index, and then JOLTS at 10. And then we're going to get an FOMC meeting. So tomorrow is a FOMC, but it's not FOMC. So it's just a meetings, but it can still be, the bars can be still large as FOMC bars, so be careful there. And that's going to be released around 2 o'clock. But we'll talk about that. All right, so here we go. There were buyers there. There were probably buyers above 12 as well. So anybody who doesn't want to buy above a bear bar, they can have their buy stop above 12. But how much are you going for, right? There's still enough space there. So if you actually bought right there and you got activated, so you're going for about a 4 point or less, okay? Now if you bought above it, right, so you already made perfect scalp there. 1 point and extra tick, maybe 1 point and 2 ticks. You already made a perfect scalp. They're going for a 2 point scalp, so it has to go to 225, right? So if you bought here, that's still 150. It hasn't made 225, so that's 2 points. It needs to get up here if these bulls are looking for 2 point scalp, because ATR is so big. Expecting just a 1 point scalp is not enough. But there's a lot more here, so more space. Bulls can still push this. We have a gap up bar at the open with bar 15. So you see how we broke above that level now after bear scalping right there. Now we close the bar 14. Now the second bar closes bullish. That means we're going to test somewhere near bar 10 high before coming down again. So if you want to actually scalp right around here, be my guest. But there's a little bit more space here to the 50-50 or 50-25. That's a nice double bottom at the support, and bulls did show up, but it's see how they're scalping already. Bears see a possible double top there, and they want to keep the gap to the EMA open. It's a good second entry. It gave you just about 4 points, I guess. Nope, 375. 4 points right there. So for bulls, okay, if they break above. This is where they're trying to go to the EMA and then up there. Or I'd say if I bought right there, this is their target. And then revert, and then just continue to go up to here if they can do that. All right, we're right at the double top. It's exact same identical top with bar 10 high. So bulls did get their 4-point as expected, but they can continue still. They're scalping a little. If they close the bar up here, there's still time. They don't even have to close it to continue up. There's not much room here. So they can easily get to the EMA, or maybe even to the breakout point with bar 6 low. They could start to take profit underneath bar 6 low right there. Or, well, bar 7 low, right? So the goal is to get up to here. But when you look left and you see a strong bear bar, a breakout bar, and a continuation, limit order sellers are there, right? So these bears who sold here with bar 10 sold up here and broke even. So that's their break even right there. Or they got out. They break even here, but they got out. So there are no more bears in the market. So this tells me, can we go back up here? Sure, we can go back up here. But first, that double top is a legit double top. And double top is okay, but, wedge bear flag is a lot better, right? So come down and maybe, and then go back up, and then we would have a wedge. Then I would look to sell. So you could see that we're going up now, but you're buying against strong. Out of 3 bars on the Globex, 2 of them closed strongly bearish. So this could be just a pullback and then bears coming back in and selling again. Yeah. 2 dojis at the lows. Market is trying to reverse back to the bar 6 or bar 7 low. Back to the bar 6 or bar 7 low. Bears need to close this bar bearish to be able to sell, but you can see that all they did was take profit there, and then some machines did scalp, but now we're bullish again. So this is the second leg up, open to the EMA. If you bought the second entry, that's good for you, but at the EMA, you might want to, at the EMA and a little bit above, you might want to take profit right around here. Okay, so we just reached the EMA, but we're not always in long. Not yet. Could this be a deep pullback for bulls? One big deep pullback, and then we actually go right back up again. At least a 50% we might. So here is my target, okay? But this is just a shallow target. This is where the bulls are trying to go, okay? So that's the measured move. If you bought above, what is it, bar 13? Or if you bought bar 12 high, then that's your target. But before then, you have the breakout point, so the bear machines know that they can scalp, maybe get half the ATR, okay? And bulls know that too, so half the ATR 7, that's 3.5. I don't know if they can make it, because the bar is still strongly bullish, and bulls got a target right there. they're trying to reach. So some sell orders did get activated right at the breakout point, and bulls know that, so they take profit early. But it could still, after that profit taken, it could come down a little bit more. Now ATR is 7, half is 3.5, right? So, and it might only pull back. They might, okay, so did they just get it? No, not yet. But they came very close. So they're scalping. You can see they're scalping half the ATR. That's it. So that's half the ATR. Can they go for a 7-point? Because it's a bull bar and it took out that wick, upper wick, okay, entire upper wick length, it's bullish enough. This is where I would just scalp and get out because we could continue to go higher. This is the target for bulls. So be careful if you're still selling, because bulls are still trying to get to that measured target. It's the breakout 1-to-1. But that was a good scalp for bear, so they got what they needed. Now the bulls are trying to close the bar as high as possible to continue to this level. We don't have a wedge yet, okay? We're coming down, and we're going to make another probably push to the high. So let me clean this up a little bit. So this is my target right there. See if they can make it. Okay, you see how they close bar 16? That's very strong. I'm flat. I'm not touching this because it's just looking for a pullback and then go again. We need some kind of double top, whether it's a micro double top or something, okay, above the EMA, or maybe 16 and then the 17 is like this, and we get the 18 with a double top with 16, then yes, that's good enough to sell, you know, and it would still give us the wedge. The last push would be weird, but it still would be like a legit, you know, wedge. So it would be like this. Then I would definitely sell, but I need at least a micro double top. Now is 16, 17 is not a micro double top. This is just a second push and second pullback. So we could still get that third pullback. But these machines are still now going for their full ATR, which is 675. I'm sorry, 650. 650 was right there. So they got it. Bar 17 is a good bear bar. I mean, I'm fine. What would I sell it? I don't see a wedge. And it's not a good double top. So there's still 2.5 minutes for bulls to turn this bar into bullish or weak bearish. So if you sell it now, you're going to cry later. So just wait for the bar to close or scalp and get out. Because all this bar is doing is scalping. See how the bears got their money's worth, which was ATR value. They got a little bit more than that, maybe a couple of ticks, but that's about it. So now is bar 17 is a pullback, okay, after the second push up. So we need the third push, even if it's a tiny little, to create a double top with bar 16, or maybe go test this target right there. That would be better for me to sell. I'm going to put you guys on hold in a minute. Bar 17 is trying to get another bear bar, but I'm not going to sell it. I would like to see a double top here at least, or maybe a push, final push to 55.75 or 50.56. We're probably going to make a new low, but it's not ready to do so. Just needs to set up first. That's it. See, this is why I did not sell that close of 17. So there it is. So if the bears want that double top now with bar 16, they have a chance to do so, but I think they have a little bit more room to make that third push. That would be a wedge setup. That would be a lot better, in my opinion. So I'm going to give bulls the room to go up. But you see how they're testing 53.25 again. They're trying to close a bull bar above it to get up to my target, 55.75. But it is resistance here regardless. Now, that's it. All right. I expected this. Now you see why. Because if you bought with the second entry, say either you bought here or you bought above, I'm going to measure from the 12, right? So that is my target right there still. $55.75. Actually, I should measure it like this. That's fair. So that's it right there. $56 maybe, but you can take earlier profit. Now also if you measure from down here, that's actually a 20 point. So the profit taken might begin around 56, might go a little bit further up to 57. Okay, because if you put the EMA from the ETA chart, EMA is the magnet which is above, so that is 57-ish. So this target is still accurate. So the market is trying to get to the EMA. Okay, so that's that. Okay, we just got the target. This is where they take profit. All right, that was a good one. It's also the third push up, you could see. The dark blue EMA is a 1 hour EMA. This is 1 hour EMA. This is 20-minute EMA. This is coming from here, basically. You see this 1 hour chart? That's this right there. You can use 200 EMA if you wanted to. So if I actually drop a 200 EMA, it's exactly the same place almost. It's the same thing. But since you're in the trade room, you can go to the brookspriceaction.com and log in. That's the trade room website. Go to the downloads folder. It's on the left-hand side navigation. There are a bunch of good stuff there available to you. You can grab it. That's where I grab mine. So I'm using probably an old script. If you're using TradeStation, there's one there that I think L's code is there and what he coded to create this. It's a little accurate on the TradeStation as people use his code. This one is for New Jersey. Sorry about that. This one is for NinjaTrader, so I don't know who created it. I'm using it. It's pretty close, but sometimes there's discrepancies with L's charts, I noticed, but it's so little, maybe like a 1 point or so. It's just an indicator. You're basically not looking at the 1 hour chart. You're looking at here to figure out, right? So it just works. Everything you need is in the bars. All right. So the price is trying to get up here. Good for the bulls, but still be careful. There's another breakout point here now. We do have a wedge 1, pullback 2, pullback 3. Now, here's what I think might happen. Okay, we might still come down. Okay, and we might make a double top with a lot bigger valley in between. Okay, and then come down and then go sideways. It is possible. But right now we're going towards this target. It is a breakout test, but this is what I'm interested in now. If we can push a little bit higher. We do have a measured move. See, I'm going to move this out of the way. Right, so we have a structure break, another structure. I can use this. That would be the target, but that's just about the 50% of this leg. I'm not interested in this. I'm more interested in bears giving me some kind of a bear flag at least. Okay, so we have a breakout bar 18, but if the bar 19 closes bearish, that's going to be a pullback. So the bulls can still buy this, but they might buy the pullback first. We don't have always and long yet. We just have a bar that closed above EMA. We need this bar 19 to close bullish so that we can push further up. But this is now resistance. Possible is double top here. It's also 3 bar. You see this 3 bar, 8, 9, and 10. So this area now is resistance, so sell zone. But I generally take upper 1/3, okay, somewhere there. So you can see is market is reacting to the sell zone. It's also wedge 1, pullback 2, pullback 3. And if you're buying, there's a small trading range here, right? So you're buying at the high. Yes, it went up a little bit because there was still a room there. But if you're buying this, you are going to get stuck. And that's why I said that we could still push towards my target. And we actually breached that. But it's wedge top. And, you know, generally I see a big bar like this. I look at it as that's a gift, because look at bar 18, the biggest bar since bar 9. I'm sorry, bar 11. So when I see something like that, I'm going to pay myself, and I don't care, because if there's a target there, targets are one thing. You just have to read the bars, and this is also a 20-point move. Okay. So market will take profit. All right, so if you actually measure from here to here, that's a 20-point move, and it breached above it because ATR is so big, it's going to drift a little bit. But either way, they are going to take profits. So bar 19 and bar 20 are profit-taking bars. We're back to the EMA. Now, if this is good enough for bears to sell and then come down and test these lows, because look, this is a 2-legged move down. It's pretty strong, and generally market comes down and tests those lows. Sometimes the goal is to breach below and make a new low. So is this good enough? Well, this is just a wedge. We need a lower high now. Okay, lower high can create a double top, and then we could start to swing down again. So what you're getting here is wedge. And the wedge, okay, you can sell this, but the problem here, that's the first sell. Okay, so this is also low 1, low 2. Okay, so it's a low 2 at the EMA is a double top bear flag. So if you're selling this, grab a couple of points, pay yourself, and see if you can get continuation, because it could just go back up before coming down. Right, so they sold here, that's your low 1, and below EMA or at EMA, so now you're getting a low 2, or I would say, I don't really generally call them low 1, low 2, it's the same, but it's just a first sell and a second sell at the EMA they're trying. So let's see if the bears actually were able to scalp. So if you sold one tick under, that's a solid 1 point and an extra tick. So bears did make money there. But this is only a profit taken. Market reacted to the sell zone with bar 7 high. We could not get up to this level, but that's fine. It's a wedge bear flag. It's also a double top. First sell and second sell, so it's low too. But will it sell? That's the question. So they're making money. Bears are making money right now. I assume we're going to go back up and make a double top at the EMA. That's the one that I want to sell. But right now they're selling, so you're making money. Now we do have EMAs parallel, okay, and there's not much of a space here. Look what happened below the below those EMAs to the bear bars. Bulls bought. Look what happened to the bull bars above the EMAs. Bear sold. So we might go sideways a little bit before coming down again. Look what happened to the bull bars above the EMAs. Bear sold. So we might go sideways a little bit before coming down again. So it's best to scalp, okay? That's why I said if you're selling this, you need to pay yourself, maybe make a point or 2 points, and then leave a runner, see if it actually comes down here. Bar 18 low is the first target because that was the last push up. So where that leg, third leg originates is your target. Well, we might actually come down to 14 area. All right, so your runner is running basically. You scalped a little bit. We didn't go up, but we can still go up. So you have gap bar. If you're quick about it, you do exactly what I taught you earlier. That's your continuation target for bears. But because I trade with wedge targets, I do have a bear flag, wedge bear flag. So this was, you could take profit there, or you could look to buy somewhere underneath bar 14. So because why? When you have a wedge, right, this is target as price comes down. Sometimes it does this and then comes down here before bouncing again. So that's what it's doing. All right, so I'm going to take a quick break, and when I get back, I'm going to switch to point counting. Okay, so because most likely we're going to be stuck in a trading range. Even though if we make a new low, we might come back up. So if the second, this is basically your bear flag leg, but if it actually traps the bears, we could go right back up again, okay? But what bears want now, test this low and break from this low and make a new low. So I'm going to put back the target again, the gap bars, 3 gap bars, 3 consecutive same color bear bars. So I have a gap target. The continuation target is 38.30 for bears. But I need to see bears take out this low and make a new low with a bear bar. Then they can come down and get this target. They're gunning for that target. But they need to close bar 21 with a bear body, 1 tick underneath bar 13 low at least. We're at the last week's midpoint. We can go right back up again, so don't be so sure because there will be probably buyers here at the lows. You got a trading range here, so there are probably buyers here. But I think the swing bulls are here in this area. So this is where price is trying to reach. Okay. So I would just let this come down to the gap measure target, but be prepared because these are nice to have targets. I mean, it's very nice. ATR is almost 10. It's 9, basically 9.25. So it's probably trying to tag it. And then we're getting closer to the buy zone once again. In fact, bears might try to swing. Low of yesterday is right here, so we might even test that. But I'm more interested in now 38.30. So we should continue to come down. Big bar, it's a breakout bar, is 21. It should get continuation. So this is now a full-blown bear flag. Can this come all the way down here? We kind of breached this small trading range. We broke it, so now we have a leg here. But as we get closer to some kind of target, these bear machines start to take profit early. Those are some of the machines take profit early, pay themselves, and then some hold to get the full profit target. So you get this inside bar and it just throws people off. They're like, what do I do here? What's going on? Is this going to reverse? Am I not going to get my target? You can pay yourself and then leave a runner because we're already there, so we should be able to get that. In fact, we could actually continue down to 38.26 to 38.25 area. So there's still room to the downside is for bears to push. If you're worried about market going back up again and looking for another double top and then sell, you can take profit because we've come very close to it. Okay. This is support after all. We're already testing. So that neckline right there, breakout point with bar 61 high and a bar 67 body. That's why we're getting a rejection or reaction, I should say, early. But what I'm interested in is this. So I like to see market to actually come down here. And if we do break this bar 22 low, we could find ourselves very quickly down at, like I said, 26.25 area, 38, 26.25, which is right here. So I would assume and expect this zone to be thoroughly tested. Low of yesterday is right there. There's a gap here that bears may want to close. And also a huge expanding triangle. I don't know how to actually measure this. This is ridiculous. I can't measure that. So I'm going to use this as a trend line that bears may want to come down and test. This area is, which also can close the gap with this day, December 28th. But buyers are probably here. But if we do dip below low of yesterday, we could quickly come down here before going back up. That will give us a wedge also. So some will see a double bottom, but it's not that kind of a double bottom. I would buy with bar 21 and 22s. But if there are any buyers above 22, they're looking for market to go up 10 points to test 40.25 or 41.25 and then maybe sell again from there. I'm not going to buy it. I'd like to sell. The pullback is maybe 38.41 area, 42 area, but it's too bearish. It's I don't know. We are at a buy zone, but we haven't tested it. This midpoint is tested and first buyers show up there. I need market to test here and give me a wedge, 10, 21, and another low here before I even consider a trend reversal. But we have a failed breakout. It's not getting a continuation. So that's kind of upsetting the bears. So we reached that 10-point area. If you measure from the low of 21, we just tested the target. I said either 38.40.25 or 41.25. We just tested it. So they're taking profit. Can it come down from here? Yes. When you get closer to a buy zone, even if you have a target, we haven't met that target yet, 38.30. But it's kind of weakened. I no longer am interested in this. Okay. You should have taken profit, which I did. But as we get closer to some kind of a buy zone, okay, so you're going to get these pullbacks because it's too low to sell or continue to sell. So price needs to pull back a little bit before selling, and that's all they're getting here. Unless they surprise me is with a really strong bull close and another third bull bar. But I think bears, they might try one more time, but we'll see. Now you have an outside, you have an inside, 21, 22. Okay. And we just tested above the inside bar 22's highs. So the bulls are basically telling us, listen, we want to buy this and we want to bring it all the way up to the outside bar 21's high and we want to break out from there. Fine, if that's what they want, then they're going to have to show me the third momentum bar closing up here somewhere, okay, with a strong bull body. Then I would say, okay, we would go up here, we would make a double top, then we would swing down again. So I'm not going to buy anything unless I see a strong bull bar. A third one. Otherwise, this can come down very quickly. Can markets start a small pullback bull trend that can last a couple of hours or maybe even an hour, just an hour? Yes, they can, but if we start to take out the bar 23 and 22 lows, then that's not the case. So I'm just going to wait here a little bit. I'm flat. I want to see bears actually take out the bar 21 low and sell is into 28, 38.28, and 38.25, maybe even 38.22.50 to 50. And then furthermore down to 38, 17.50. So I'm not that excited about buying anything here yet. I want to see the third push and get this area tested. Now it's 20 EMA crossed below 1 hour EMA. So that makes us a slightly bearish. This is also always in short bears. Okay, so you have the 20 and 21 close below EMA. market conditions change quickly all the time, so I'm just looking at the reason why I didn't want to buy, because this could be just a pullback before selling again, and because we're bearish. I will change with it if bulls do show up, but I don't see it yet. Bears trying to make a new low. They're okay. They just did one tick below 21, but they need to close the body. They need to close this body below the 21 low. See, I said we need to test here. That's exactly what's happening right now. So swing bulls are not going to show up, okay, and start to create a small pullback bull trend. They need to test this area. So sometimes you have to look at areas and see where the bulls are sitting, and then maybe be patient. Now, in order for bears to sell, like I said, I need bear bar closing below. We just tested, but you got 1, 2, 3, 4, 5 bars overlapping, so it's a limit order market. I did not buy bar 24. Can bulls start to show up here? We already made a new low, so this isn't really a small pullback bull trend starting here just yet. It's not ready yet. 24 made a new low, one tick new low. 24 made a new low, one tick new low. So we're gonna test the low right here, at least. Now, if I do see a big bull bar, okay, and this fails to sell, and suddenly we get this big bull bar, I'd be inclined to buy, but I don't see it, so it's just a speculation at this point. So I still think and expect bears to come down here. If they don't want to come down here and this is good enough for them, and this is a second leg failure for bears, then okay, they're buying at the low of this trading range and they're selling up here, but the bar hasn't closed yet, so I can't really rule out these bears done with their, you know what I mean? So they're not done. That's it. So, I mean, I can read this 100 times and say the same sentence in 100 different ways. Basically, if I have a zone here and I keep it on the chart, that means we're going to test that zone. So don't get too excited about buying. So there you have it. We're testing it, and there are no pin bars or buy signal bars or bull bars yet, so let them sell. This could actually come all the way down here. Market wants to close this gap, most likely, so they're still pushing. Gap close around here. Okay. I was going to take a quick break, so I'm going to take that now. Now, if you want to swing this, we do have a wedge, 1, 2, 3 wedge. What you need is, first of all, a pin bar, okay? Yes, this is a pin bar, but it hasn't closed yet. There's still 2 minutes, right? Better if it's a bull bar. It's just too big. So we could still come back down and test the 50% before going up. But if it closes on its low, then this is a bear flag, and it's still going to sell. It could come all the way down here. Okay, so be careful here. I said we would test probably 38.26. I want to make sure I didn't lie about it. Well, I didn't. So it tested 27.75. It came one tick below. So I was accurate with my assessment. Now, I don't know if they're done. I don't know if this is okay to buy. I am not going to buy this bar. I'm not interested. It's just the first buy orders are activated. There might be more here. The market wants to dip in and run some stops. Remember, these bulls got stops here. So in order to create a strong swing long or small pullback bull trend and get these guys out, bears out of their positions, we need to upset them first, okay? We've upset no one yet. we're just testing a buy zone, and those stops are still here. And those bulls want to keep this gap open. But anytime this gap closes, okay, then more bulls are going to be upset. And then they're going to start they're going to start selling, right, as we come down. As they start to sell now, because they see a breakout possibly, and then the market makers can reverse it and go up. And now you're upset again because you lost here, now you lost here, you're loser double time. So that's what they want, okay? They want you to feel like a loser, believe it or not. Because then for the second time, you're going to be now jumping in with them and go long. You're going to help them move the market higher to where they want to go in the first place. So until you see everybody's upset and crying at some corner, don't buy, okay? Just wait. So see the writing on the wall first before you buy. Bears are still pushing this further down. We now have a spike, pullback, and 3 push down, a variation of, okay, a bear flag that will probably gonna go up and then might sell again. We'll see. But I think we're finally getting ready to go up a little bit because we're running some stops already. The measured target is on the 50-minute chart is also met. You can see right there that red dash line, but bears might be eyeing this area right here. So if we start to swing again, we might end up quickly coming down here. All right, so let's see. We need to get above 38.31. If we get an engulfing bull bar here, we have 3 dojis now at the lows. Bulls need a bull bar and another bull bar. We need a couple of bull bars closing on their highs. So high 1, 29 from the lows. Bulls need a high 2. It's, you know, they need to get some bull bars here. Bears are trying to sell, okay, right here. ATR is 650. I wouldn't sell it. I mean, there's only 45 seconds left this bar to close. If you sell it now, you could get trapped here. So don't sell because bulls are trying to starting to swing this now, but I don't see a good, really strong signal yet. All right. Bulls are trying to get a second entry here, and they're trying to get a 10 point at 38.32 or 38.33. Yeah, they might actually push it higher, but that bar 30 did not close that well. So let's see if they can actually close this bar. So this is think of this as a low probability entry because your stop is so close nearby and you're entering right here, and you're looking for a swing, but you may not get it because your stop is near, okay? So you might end up getting just a scalp here and then bears can still sell it. So the bulls are, let's see, bulls need to close a bar above the high of a 30, like either right at the high of 30 with a bull bar or above it, then their target is going to be 32 or 33 area, might be even higher up to 38, 37, 36 and 37 area. So see if they can close it. They need the bull bar first, otherwise they may not go too far and this can still continue to come down. I've got a Globex target right down here. I'm looking to see if there are other, like you can take this as a measured move target. So this would be 38.05. That's around 38.09 because the wick is so large, okay? Sometimes when I'm getting my measured move targets and the wick is too large, I try to not to get the entire wick, maybe get like the half of it. That puts me around the same area, 3809, 3809, 3810. Yeah, just about like this area is still bear target, okay? Bulls need a second bar. See, if you buy here, or you entered, it's a low, basically you're looking for a run, but your stop is so nearby and you're going to be kicked out. We don't have a 6-point move. All we have is, if you count from here, maybe a 5-point scalp, but that's about all they got. So bulls could not close a bull bar just yet. They're testing that pin bar's midpoint. Okay, so bar 30 is midpoint. They can still get it. They can still close a bar, and I'll tell you exactly where they need to close it. 29, 38.29 and above, we need a bull body close. If we get that, bulls will go for at least a 4-point scalp easily, 4 or 5-point scalp easily. Otherwise, market is just making flag after flag. But you can see a bunch of dojis, bunch of lower wicks. It's getting to become very, unreliable for bears. So they're taking profit, and they're showing you that they're taking profit. So if there are any sellers, those sellers might be up here or here. So bulls are still trying to get to that 29, 38.29 and close above. And they couldn't. So this bar failed again. It's another doji. So basically what you're seeing here is down, one, up, down, up, down. Now bulls can show up. Let's see if they can. There's a micro wedge there, okay? If I actually go to 2-minute chart, I know you can see it, but down here, 1, 2, or let's see. I'm going to count from here. 1, 2, 3, 4, and 5. Yep. So here we go. This is where market is trying to go. Either that or that bar 66 high. So this is where they're trying to go. Get rid of this. But they have to close a bull bar around here. Right? So you have down, you have up, pull back, another down, another pull back, and the last push. Somewhere 34.25 to here is where bulls are trying to get to, or a larger 1, 2, okay. We might make another push up to here and then swing down yet again. So I would like to see bulls push towards this way. So let's see if I can actually scalp a few points here. I need that bar close at 29, and we can easily go up to 32 and 33 area. There you go. See that? There's a nested wedge there. There's a nested wedge. Now we have this going on. So there's the impulse, pull back, impulse, pull back. We could swing one more time. And then towards the end of the day, go back up. Or sometime around 1:30, we might start to swing back up. So this could be just a pullback to this area. Sellers might be still there. I'm trying to scalp this 10-point zone above, which starts at 32, goes all the way to 34. I'm long, and I'm about to take profit. Waiting for 32 to hit. Excellent. I scalped. And here it is, 10 point. This could go a little bit higher. I found the wedge targets right on the 2-minute chart. I switched to it. You don't have to switch to it, but right there is their first target, and these bulls want the tag here, 34.25. But I don't care about these targets. What I care is what the machines see as target. So what did I say? I said that either 32, okay, 32 or 33, hello, 33 is target. Look, we just tested 33 and they're taking profit. So point counting, you can do technical analysis on anything. Most of the time you will get these after a pullback, but if the machines see a point counting area is first, it comes first, they're going to take profit there. They can still continue up. This is still the target because of the you know, what I'm counting, the legs and the corrections. But my job is to scalp safely and pay myself first. So that 10-point area is more important to me. All right. So you can see how I saw the reversal coming, right? But I'm going to switch back to the 5-minute chart. Now, what have I said earlier before I have taken my break? I said that this area is a swing zone, but before then, we need to upset some traders. We need to start running their stops. You can see the bar 29 and 30 ran a few stops there, and we now have a big bull bar closing. That's the second entry. Also, first entry and second entry, or we might get a much better entry. So I still think that 34.25 is still the target. So and furthermore up, the projected target above the EMA is also doable. But swing bears are not done yet. They have target down here. They might still want to close this gap. But it is weakened so much so that you know, I was able to buy and scalp very safely there. A couple of points. In fact, it was a lot more than a couple of points. I went for, what did I go for? I think I entered, let me see. Okay, so, where did I buy? Yeah, I just bought right around 28.75. And then I scalped at 32 or 32.25, something like that. So yeah, that was a good scalp. Nothing fancy, but it was just mine with a couple of contracts. It was phenomenal. But some might say, hey, that's not a living. You can't. How can I not make a living if I, you know, see a really high probability scalp there, but a low probability swing? So I'm going for the high probability scalp, right? Smaller stop. I have a very small risk. I have a good scalp area. Even ATR is telling me I can grab 4 or 5 points. I had my chart analysis also telling me that market wants to go up. I'm also counting with the machine, so that's fine. It all tells me I can safely go long and scalp. Now, what the bulls are looking for is, well, there's nested wedge. They're looking for a higher low. Now, if the 32 is their higher low, then they're going to look for now is much bigger, okay, targets. Okay, so guys, Brad just posted that he's going to join soon. Well, he's kindly and politely nudging me, saying that you are exceeding your time. Get going, Rose. I get that. Sorry, I took a break, Brad, so I'm just gonna go maybe another couple of minutes and then I'll go. So he's saying that he will be talking in the room, always in trading. I'm looking forward to that also. So you guys stick around. He will come in soon. Now tomorrow I was supposed to do the morning session. Well, I was supposed to do all 4 days until Friday, all week long. But I have a doctor appointment tomorrow, and it is 10 o'clock. I couldn't go today, so I have to be there tomorrow. So I'm not going to be streaming tomorrow morning, but I'll work it out. See, if there's nobody in the morning, I might come in and do the afternoon, although I don't know if anybody's scheduled in the afternoon. I don't want to take over anybody's time, so I haven't really talked to Ken about it. But we'll figure that out and we'll announce it, okay? Worst comes to worst, no roast tomorrow, and someone else will probably come in. Otherwise, I'll see you guys in Discord this afternoon and tomorrow. Okay, I'm gonna get going now. You guys have a good day. Target is still 34.25, and if we do close the bull bar above it, we're gonna continue to go to the projected target right there. So this is still always in short. We have been always in short here. We became always in short here, and then we had a swing, pull back and swing down. We still have targets down here, but nested wedges, so I expect a little bit more pullback to the upside. All right, I go now. You guys have a great day. Thank you for your patience, for the long break that I've taken. I'll see you guys tomorrow.
Hope you all are doing well. Thanks, Rose, for the presentation today. Let me just check one thing and I'll share my screen. And I moved the mic around, so let me know if there's an issue. If anyone can't hear me that well. But don't worry about it. So overall, with today, we've had a trend from the open. And right now, you can argue 3 pushes down, 1, 2, 3, tight channel down to bar 10. So probably we may need one more leg down. Let's see here. There we go. So 3 pushes down, 1, 2, 3, probably 1 pullback, 2, and this may be the 3rd leg down. We have a small wedge, 1, 2, 3, testing Friday's low right here. It's possible we have to go a little bit lower and reach the measured move projection from the open of bar 4 to the close of bar 6, projecting down. The bears, they see a double top and they want to break below the neckline and measured move down. Rambler, let's see. Does that look any different if I full screen it? Let me make sure there's not a setting. Okay. Yeah, let me know if the screen's too small, if you guys are seeing an issue. So I'm going to review just a quick second of what's going on right now, and I will talk about always in trading. Yeah, this is a 15.6 inch screen. So, or 15, whatever the normal size laptop is, so the screen shouldn't be too small. So overall, what I think is going on right here is the evolution of the trading range. I have this line right here for a reason, because if this is the 3rd leg down, leg 1, 2, 3, or better yet, leg 1, pull back, leg 2, pull back, leg 3, we've already met this target. I think we're going to try and go up to here. This is enough buying pressure from bar 10 to 18 that I think the market's mostly going to go sideways. Okay, yeah, Rambler, there's a setting. He's saying they're saying there's a setting in the GoToWebinar to adjust the screen size. So before I go any further, let me just talk about always in and what traders I think should focus on starting out. The first thing you have to focus on is you've got to, trying to think of the easiest way to say this, you've got to study the video course enough to fully grasp it. And that is a lengthy task. So watching the course once and thinking you're going to know everything is just not realistic. So what I would do is think about the video course and pay attention to the outline of it. There's a reason why the videos are sectioned the way they are. They're meant to learn in order. And for example, after the terminology and candlesticks and all that, what's a setup, what's a signal bar, one of the very first chapters, if you will, or sections in the video course is about bar counting. Bar counting is extremely important to understand. Why is that? And all of this relates to always in. I'll tie it in just a second. Bar counting is the simple concept of why does the market reverse after wedges? So if we take a look at this chart, why does the odds slightly favor a little bit higher prices in sideways? Well, here's a breakout. This is leg 1. It's strong enough to reset the count. Here's leg 2. Here's leg 3. That increases the odds that the market's going to have 2 legs up. It might be leg 1, pull back, leg 2, but more likely this is going to be leg 1, pull back, leg 2. So how do you use that and how do you trade with it? Well, the first thing most traders should focus on is finding a breakout that is strong enough to have a second leg down. And what I mean by that is finding a breakout that is, most breakouts have second legs, but find a breakout that you look at and you say, yeah, that's going to have a second leg. I need to enter. Well, so what are some easy ways to do that? The easiest way, one second. The easiest way to do that on the open is to look for a breakout with follow through. So if you look at Al's charts, on the open, he will typically mark bear breakout, follow through, sell to close, and always in short. You know, not really good over here. Full breakout, maybe follow through or follow through here, buy the close, always in long, and enter. So I would really understand how to count legs, the market cycle, and always in. So let's talk about always in trading the open. I think the single most important thing people could focus on is how to trade the open. So if you look at most days, you can pretty much categorize. There's a reason why I say most traders should expect sideways for the first 6 to 12 bars. And the reason for that is the first 6 bars of the day will typically give you a lot of information. So most traders should focus on looking for some kind of a strong breakout on the open, such as this. Bear breakout, follow through. It's always in short, sell to close, and hold for a couple legs. Give me just 2 seconds here. I got to manage one trade I'm in. So now 3 pushes down, 1, 2, 3, testing the low of 30 and the 48 low, trying to break the downside. I'll go back to always in just a second. The bears, they want a double top with 26 and 32 and a measure move down. More likely sideways. A lot of buying pressure here, decent buying pressure here. It's possible this is a measuring gap and the market leads to lower prices. But let's see here. So might be a strong enough breakout for at least a small second leg down. Okay, so there we go. So overall, I think we're forming a trading range. And this is leg 1, this is leg 2, maybe that's leg 3. I think this is a reasonable target for the market to go to. So let me back up and go back to always in trading. Always in trading is simply trying to find the highest probability direction over a certain number of bars. And the way you can do that is looking at the open and trying to find a swing trade. There's two common things I say on the blogs. One is first 6 to 12 bars expect sideways, and the second is, and this is in the pre-market, the second is look for a double bottom or a double top or a wedge bottom and a wedge top. Reason being is most of the time the market forms one of those two patterns before there's a swing trade. And as far as always in goes, for bears, I think bears exit above this bull bar, assuming it closes above its midpoint. So here's the double bottom. So let's take this example here. How would I trade the open? Well, there's two things I'm going to look for. I'm going to look for consecutive trend bars on the open, or I'm going to look for a double top, double bottom, wedge top, or wedge bottom. And I'm going to expect the first 6 bars to have a lot of sideways trading, first 6 to 12 bars. So bar 1, do we buy it? Well, no, it's not consecutive trend bars, so ignore it. What about here? No, because it's not a double top, it's not a double bottom. What about here? Okay, it's a double bottom here and here. Maybe a nested or a double bottom on a smaller time frame, leg 1, pull back, leg 2. That's an okay buy, stop below. And what I would do is, I'd just say, okay, I'm going to hold for 10 bars and 2 legs. So good follow through, stop down here. No reason to get out, probably a second leg up, and breakout, follow through. Maybe look to take profits up here, leave your stop down there. At this point, the market's always in long. So if I had to pick a direction, okay to be long. Strong enough breakout, probably a second leg. Now we have a third leg. Well, what does Al talk about on third legs? Most of the time, 3 legs lead to a pullback. So 1, 2, 3, with the double top, got to get out below that bar. And the always in direction changes. And if you had to do anything, you short. So what do you do on a day like today? Well, a breakout, but no follow through. So if you don't do anything, then you get a really big bear bar. Is this a strong enough breakout with follow through to sell the close? Yes. So it's okay to sell the close, stop up here, we're here, and hold for a second leg down. Then you get another bar. No reason to get out, no reason to get out. And you can get out here, but the reality is this is tight enough, you're probably going to get another leg down. There we go. So no reason to get out. So if you're doing anything, it's okay to be short, stop up here, and hold. So I'll talk more about that in a second. So what do bears do above 36? I think they get out. Why do I think they get out? Because in a trading range, it's not ideal to be short at the bottom of the range. So one of the things I would consider doing in this situation is buying and using a wide stop. So give me just 1 second here. So I think what a lot of traders, some will do is, at least what I like to do, and I may take a simulated trade on the webinar to show this, but if I'm a bull, if I'm a bear and I'm short, I'm trapped on 36. Therefore, it's reasonable for me to try and buy back a short somewhere down here. So if I'm a bull, I may put a limit order to buy somewhere below. I think it's okay to buy above 36 and use a wide stop, at least, maybe something like this, somewhere down here, 38.15. But if anything, probably always in bears exit. And the reason why they exit is because if this is a trading range, we're low in the trading range and the market's going to go up here. I think we're going to this high right here at minimum. So always in short, aggressive bulls buy above the bar, stop below. And in fact, I have this set up right here. So I probably will. It's just set on the micros, and you can see it's a simulated account. But I suspect I'll try and take something in a little bit. But if I didn't buy above here, what I would consider doing is buying maybe after 2 or 3 bull bars. I'm expecting a couple legs up. I'm long right now in my actual account, and I had a wide stop, and I bought on the way down in pieces. And the reason I did that is primarily because of this. Here, 1, 2, 3, it's a wedge testing here. So I thought this was a credible, for one, I thought this was 18 was a bad buy. I thought it was a trap. It's a bad area to buy for the bulls, and bear sold it. I thought it was credible to sell below here. This was strong enough along with this to make me think that the odds favored more a little bit lower, but somewhere down here, I thought we were probably trying to bottom. So I thought it was reasonable to buy anywhere in here, use a wide stop and scale in. And right now, I'm kind of trading this in lots of 3. So I've basically been splitting my position up. I don't think most traders should trade this way, at least starting out, but I think a lot of traders build positions and take profits along the way. So what a lot of traders do, they buy, the 34 low or the 35 close with the wide stop and buy a little bit lower. But for me, I just got filled on part. I took part off here. I'll take a little bit more off somewhere here, and I just have another position. But I'm pretty quick to exit. So I will buy a position here, and what I'm going to do is I'm going to buy, put a stop down here, and buy it, and I'm willing to buy more lower. Again, this is simulated. So this is more for demonstration, not to just understand some thought process. But at the same time, I've got to focus on the actual trade I'm in. So I need to be a little cautious. And what I will do is I'll just put a stop way down here. I'm going to put it below here. And my intention is to not let this stop get hit. This is a bad risk reward trade. It's a high probability trade and bad risk reward. So what that means is I have high probability. I'm just putting a target 5 points higher, and I get it. My stop's down here, my risk reward. Technically, my risk is more than what I'm going for. I'm willing to buy more lower, and I'm also confident in my ability to exit the trade if it goes wrong. So while my stop is theoretically at the 35 low, there's no way I'm going to let that get hit. For me, this is strong enough for a second leg. So I'm willing to buy, confident that we'll get a second leg. So I'm long, and let me just put my stop down here, 20 even. So there's my stop. And you can see, how can I risk $78 and go for 25? Isn't that a terrible risk reward? Sure, it is. But you can only do that if you're able to exit the trade quickly. So let's see what this bar looks like. Now, what would I do if this bar closes all the way down here on its low? Well, I have to think about the possibility of 2 legs up. Leg 1, pull back, leg 2, an expanding triangle, possibly a second leg trap. So if this bar closed far on its low, sure, I'll just get out of the trade. No big deal. I can always exit a trade and re-enter. That's the great thing about trading. You do not have to marry the trade you're in. But for me, at least at this second, this is strong enough for me to expect higher prices, which is why I'm okay with holding and being long. But the stop is real, and it's down here. And again, I cannot stress, I'm willing to scale in here. I think one of the biggest problems, and really, well, let me just finish that. I'm willing to scale in, and that also means that because of that, I'm going to accept the risk. I think that's one big problem people have is they understand the logic of scaling in. However, they buy more lower, and they cannot fathom the stop being this far away. They think they're okay with it, but when the market starts to sell off, they all of a sudden realize that they're not okay with the trade. So how am I feeling right here? I just have data. So med guy, I don't pay attention to all the levels. If you really want to know the data I have, whichever one that cost me like $60 a month. So I guess that's just normal real-time Globex data. So one thing I'm paying attention to here is how is this bar going to close? Now, because this is taking so long, I have I'm already thinking about the probability being lower than what it initially was. First touch to the moving average in some time, not great for the bulls. So what I'm trying to do is buy right around the start of this buy signal bar right here. And what that's done, whoops, when the matrix does that, what that has done has lowered my entry price. So how am I feeling right here? Well, I'm disappointed, to say the least. And that is disappointment and confusion, hallmarks of a trading range. So what I like to do is I typically trade pretty small. For example, I'm trading in my other account, I'm trading small enough to where I could buy this close and use a stop down here. So I could actually buy more at the low of the day. So if that gives you a little bit of perspective. So let's see how this bar closes. I just move my stop out of the way for the moment. But again, for one, I'm trading small enough to where I'm okay with that. What I just did is I put a stop basically here. If I'm in the right direction, the market should not go a measured move down, at least at the breakout bar. And for me, that's just an easy default. But I am sufficiently disappointed in this trade that I'm probably going to look to, it's probably going to be more or less a scratch trade at this point. That was stronger than I wanted, but I'll look to re-enter. Give me just 1 second. So I really should have gotten out there. I'm still interested in buying down here, but I'll wait for the momentum to slow down. 38, it's 2 legs up. It's an okay short. I really should have gotten out below the bar, but to be honest, it's a little challenging doing this, trading one account and taking a simulated trade at the same time. So I'm going to wait to see how this bar closes, and if it closes, then I can just re-enter. So still enough buying pressure here for probably sideways. So is it sell to close down here? You can argue it is. You can argue this is a strong enough breakout for a second leg down. However, this is probably going to develop into a trading range, which is why you may see a tail here. See, we reached the target. Well, let me go back here, make it a little easier to see. I'll come back to that screen. You can see we reached the target from here to here. We're from bar 4 open to the 6 closed, measure move down. So big enough tail on 40. What's the biggest difference between, let me finish one thought and I'll answer your question, beta guy. So strong enough breakout, probably a small second leg down. What do the bears do if this bar closes up here on its high? Well, most should exit. For me, I should have gotten out at a minimum below that bar. But, you know, again, probably should have gotten out below 38 or on the close of 39. So why did I just exit on the close of basically where 40 is? Well, for one, I'm confident that I'm going to re-enter and buy somewhere between the next bar and 6 bars later. Therefore, I can just basically re-enter the exact same position and make up what I lost, number one. The second portion is it's just to get out and I can quickly reset and rethink about what I'm doing. So why is 19 and 38 different? Well, 19 is a wedge. And that's a strong breakout, probably second leg. So I think it's a reasonable short to reasonable sell below 19. 38, it is also, you can argue wedge, 1, 2, 3. But to me, this is the evolution of the trading range. 2 legs down on the day, breaking below the prior day, yes. So here's the prior day. However, probably not going to have the same energy here as the market is. This is not going to have the same energy here, most likely. It's possible it does. It's possible it goes a little bit lower. But I still think we're going to go back to here. The bulls that bought this close should not have gotten trapped and unable to avoid a loss. I was one of those bulls. I got trapped. I was not able to get out with the loss. I'm confident that the market is going to allow me, if I am a bull, to get back up here. 80% of the time, it does. Therefore, 80% of the time, it does. Therefore, I think the odds, that increases the odds of the market going more sideways here than straight down. It's an expanding triangle. 1, 2, 3, 1, 2, 3. Probably buyers somewhere below here. Now, the other point with that trade is if you're going to trade small and use really wide stops, you have to trade very small. Most people can't do that. And that's why I recommend so much that most people trade the SPY, because you can trade as small as you want to. You know, I know people will disagree with this, but most people should risk less than 1% of their account balance. I do firmly believe that. So you can argue 38, 39, and 40, strong enough for a second leg. So some bulls will wait for a micro double bottom. The bears, they're hopeful that the market's doing this. Double top, measure move down. But I think the reality is you just have to ask yourself, what's more likely? Are we going down to here or are we going up to here? At the moment, I think we're going up to here, somewhere up here. This is damaging, though, to the bull case. Let me mention something about the euro while we're waiting for this bar to close. I thought it was interesting that the euro dollar, at first, you can see the market tested pretty much the low of this bar. Let me see here. Why is it not? There we go. So the market here tested the open of this bar, close of this bar, tested right here, and went a little bit above it. And it's been going sideways for several days. And I thought the odds were that the market was going to need to get to the moving average. And you can see overnight, the market raced up, tested this measure move target, and then turned down, and now it's at the moving average. So whenever you're away from the moving average for many bars, the odds favor the market getting back to it. Strong enough breakout though, probably at least a second leg down. So is that bull bar enough to erase the damage of these bars? Probably not. So again, I do want to buy again, and while the low one short below 41 probably is not ideal, I'm just going to wait for a stronger looking bull bar. Ruben, you asked how often do I stop with the loss? Do I tend to not give up the trade management scale out? Yeah, I screwed up that trade, I will admit. I should have gotten out below. In general, my rule is on the third leg up, 1, 2, 3, to exit. In other words, not be careful about scaling in. If it's a bear bar closing on its low, get out and look to buy more lower. So I really should have just exited below this bar, certainly below this bar, and waited to buy it. So that was kind of mismanagement on my part. And in part, I'm talking right now, I'm still long my actual account, and I'm also trying to simulate on this. So it's a little bit of distraction, and the reality is, on the actual account I'm trading, it's just me in here. So I don't have to worry necessarily about everyone watching me. But either way, this is in part why I probably just at that point should have held long. But this is why I thought it was a bad short. So I messed that up. Now I have to find a way to get long. But, this is kind of also a little bit of a lesson. You're going to mismanage trades. And the most important thing is to not be frustrated about that and move on with it. For me, if I screwed up on that trade, who cares? There's always trades later on. I'm not going to get upset because I mismanaged a trade. One trade does not make you a failure or successful. It's a combination of many trades. So what's going on right here? You'll have some bears selling the high of 40 for a scalp. 41 is an inside bar. They'd rather sell more above here for a scalp. For me, I wouldn't do that. I think it's okay to do that. And I think a lot of traders, I was one of those traders. I sold here and scalped out. But this is the first leg pretty much down. Here, it's possibly the third leg. So I think there's more buying somewhere down here than selling. But the bulls still need to show more signs of strength. Some bulls who bought the close scaled and lower, using this to get out break even. So what are my thoughts here? Well, the bears broke below the 48 low. That's good for the bears. But this is not ideal. So that is disappointing. Yeah, I really do think though that one of the biggest keys to trading is trading small. And, I cannot stress that enough. Trade small enough to where you don't care about what you're doing and you'll inevitably do the right thing. So if I'm a bear, 42 is an outside bar. That means 43 might be an inside bar and a second entry short. The bears want 43 to close on its low and lead to a second leg down. I think more likely the bears are disappointed here and they are trying to decide what to do. One thing I like to do is to put myself in the position of both sides. So if I'm a bear, if I sold this close and my stop's up here, which I did not, what would I do? What am I feeling? What are my thoughts? To me, I'm probably disappointed. And if I'm disappointed, I probably want to get out at my break-even price or get out, maybe break even on the entire trade. Maybe I sold here, scaled in above this bar. Certainly a reasonable thing to do. So now I'm deciding, do I want to get out break even on the entire trade here or try and get out here? Yeah, Matt R's right. Break game's also right. Trade small enough that you don't care. And it is, and do it as, yeah, I agree with that completely. So I want to buy again, but my problem here is I want to be careful about not I want to be careful about not buying a potential second entry short. So IOI here, as Rose said, second entry short. I think it's reasonable though for a trader to, as this bar is going down, buy the close stop down here, betting that the inside bar, there's going to be something wrong with it that's more aggressive. But what you're doing is you're anticipating that this bar reverses in the final seconds, kind of like what it's doing right now. A lot of traders bought betting that the sell-off was a 50% pullback and that the bears are going to get a bad second entry. So, again, I think it's really important to I think the right way to put this. One has to learn to not be aggressive. For me, if I bought here and mismanaged the trade, this trade's over. I screwed it up, whatever. Now I need to figure out what the next most reasonable thing to do is. And that's really important and it's a challenging thing to do. I think it's easy for traders to mess up and become very aggressive to make the loss up. And that is inevitably what screws people up. So, give me just a second here. So I still think it's reasonable. If I'm a bear, I'm disappointed, and I may try and get out break even here. So I think it's reasonable for traders to try and buy anywhere in this area and use wide stop. Wide stop. Yes, I agree with Rose. Bar 40, possible midday reversal. So we have an inside bar on 42. Probably strong enough 42 and 43 that the market will go at least a little bit higher. So I still think one of these lower highs is a target, and it's probably going to be this one. The first target is going to be this close, and I think we will probably get there. The other thing to think about is, whoops, let me see here. Tight trading range. What's this bar going to look like at the close? It's probably going to have a tail. Lower probability if this sells off for the entire day. So the market's deciding, is this breakout strong enough for a second leg down? And to me, I think the market's going to go mostly sideways here. You know, let's look at a 15-minute chart. And you can see probably be like that, forming the trading range and going somewhere back up to here. Be like that, forming the trading range and going somewhere back up to here. So I am suspicious of the bears here. So some traders most traders should be flat here. Better to wait for some kind of second entry. 44, you can argue low too short, but tail below 44 and 43, probably buyers below. The bulls want a breakout measure move up. So what I'm going to do is I'm going to take more trades in this, but what I'm going to do is really try and focus on just always in, because that is probably more fitting for the trading room here. And that's a little challenging to do right now because on one account, I've been long for over an hour and I bought in pieces on the way down. So I'm having to, for being honest, it's hard to switch in between trade methods, if you will. But the other account, but again, to give you a perspective, the risk in the other account is less than 0.5%. So as far as some of the people were talking about for risk management earlier, it's really important most traders risk less than 1%. 2 legs up, 42, 43, strong enough breakout for a second leg. I still think we're going up here. What I'm uncertain of is, do we have to pull back first? So what I'm going to do is I'm going to wait for, I'll take a trade when the always in direction changes. Because I really don't want to, I want to be careful about explaining too much from a scalping and scaling in perspective. The bears, they want a second entry short here, but I think this is enough damage to increase the odds of more sideways. So the market's deciding right now, do we test up to here or do we have to test back down to the bar 40 area? As far as for a swing trade, I guess my hope is we test back down to the 40 area and form a double bottom. That would give the bulls a better chance at getting the test up here. So yeah, I'll focus more from an always in perspective. That'll make it easier. So what do always in traders do right now? Some of them, you can argue some traders are short, stop above 39 or 40, stop up here, betting on a second leg down. And that's reasonable. So what I will look for is a test down and a double bottom to buy. And then my hope would be, from an always in perspective, we get some kind of measure move up to here. 2 legs up, do 40 and then 45. You always in bear sell again below 45. Some will, but I don't think it's ideal. In fact, there's probably more buyers below 45 than sellers. Or buyers below 45 than sellers. And the bulls are trying to get a second entry buy after 42 and a test back up to the 39 close. Or the 37 close. From an always in perspective, it is reasonable for bulls to exit below 45, but I think we're developing a trading range. We're 3 minutes into the bar, and we went 1 tick below 45, and the bears aren't making anything. What does that tell you? That tells you that there's not a lot of energy below 45, and there's more buyers below 45. If this bar closes on its high, traders will buy, betting on a second failed breakout of yesterday's low and a possible reversal up. But the bulls need something strong here. So for me, if I'm trading always in, there's nothing for me to do right now. I can sell below 45, but I don't want to. And because I think the market's going to reverse up. And to buy, I don't have a good signal bar yet. Therefore, can't do anything. It's probably forming a trading range. Probably buyers somewhere below 46 and probably sellers somewhere above 45. So again, my hope is we go to the downside and reverse up with a good signal bar. That would create a reasonable buy. Now, if I did sell below 45, 46 is a bad entry. Therefore, I might be tempted to exit around break even right now, betting that this might be a trap. If I'm selling, I want a bar, like if I'm selling below a bar, 38 or 19, I want a strong entry bar. I don't want this doji. That tells me that this might be a brief window for the bears to exit this trade. So it's possible the market, we find buyers here and the bears give up. But from an always in perspective, there's nothing to do yet. Sometimes in this scenario, what I'll do is I'll start buying, betting this will get a bigger second leg, and maybe I'll use a stop fairly wide, somewhere maybe down there. That's what I do pretty often. So in this case, though, I'll wait for some kind of a stop entry. So for me, if I'm trading always in, which that's going to be my goal over the next, however many times I'm in the webinar, I'm going to try and talk more from an always in perspective. So right now, there's a short stop up here maybe, but to me, this doji is a reminder that there's something wrong with the bear case. That means there will be some bears who will scalp out here, basically break even or with a small loss, betting that the market is not going to, that this stop entry is going to fail. If you look at a lot of charts I've posted on the blog or Al has, what you'll notice is, you can see the market's reversing right there. What you'll notice is that Let me do it like this. Let me just bring up the chart. Give me just 1 second. So let's take a look at this for a second. What do you notice about these stop entries? You can almost take every one of them and not lose. Sell below here, make money. Buy below this bar, no reason to exit. You buy here, no reason to exit, second leg up. If you bought here, you could hold below this. You wouldn't buy this, it's 3 pushes, 1, 2, 3. You sell here, odds are 2 legs down. Even if you sell below this bear bar right here, which is, I'll come back to that in just a second. So let's see here. So what I will do is I'll trade 2 if this bar closes on its high. And the reason I'm trading 2 is it allows me to take part off. But I'm only buying if this bar closes on its high. And that is not good enough for me. So I will wait for another bar. But always in bears, I think it's reasonable to exit here. Go back to what I said over here. What I mentioned was I thought 45 was not a great bar. And if I sold below it, let me remove this for a second so we can see it. If I sold here on 45 during 46, I was disappointed by the entry bar. I made the comment that I would just want to get out basically with as small loss as possible. This is why, because we're breaking to the upside. So probably going up to here. You know, it's really interesting when you have 2 or 3 legs down on a day, leg 1, leg 2, or maybe this whole thing's leg 2, leg 3. The odds are really high that you get to the 3rd leg. So I need to, give me just a second, I need to manage the actual account I'm trading. So one of my targets is at the close of 37. And I'm just about to get filled, it looks like. So this is why I screwed up this trade. And this is a great example of a skunk stop. So I'm going to pick on myself for a second and critique what I screwed up on. And hopefully we can learn from it. So there's 2 things I want to say. The first, there we go. I wanted to just go ahead and get out of that trade. So I'm out of the trade I was in, but whenever you take a trade, you have to think there's two types of stops. There's the quick exit and the late exit. And I actually just got out in part because go back to the trade over here when I bought here and I got stopped out down here, which is almost the worst trade management. But there should have been buyers below this bar. And in fact, there were sellers. So what are a lot of these bulls going to do? If I bought here, the proper management for me, at this point, I should have stayed long. But, you know, I messed that up. No big deal. And because of that, if I was long, I'd be selling right up here because this is right where I originally got trapped. So I think there's a chance there's bear selling here as well, but I do think we're going up here. So that's why I just got out. But there's really two types of stops. There's the early exit and the late exit. And the problem with the late exit is you have to be very careful about not selling at an extreme. If you're in a bear channel, it could be really dumb to exit right here. So a lot of times the trades I'll take are fairly wide stops. In my other account, to give you a perspective, I bought in pieces here. Basically what I did, if you want to keep it simple, was I was long down here and had a stop pretty much down here. And I bought, and as this went up, I took part off, I don't know, half off, and then I bought more on the way down, and I had to stop all the way down here. And that was what I was trying to mimic in the webinar. But again, I don't think that's not the best thing to show here. So I'm going to not do that anymore. What I'll focus on is always in trading. So for me, 2 legs up, this makes the market always in long, but we need a strong breakout bar. And the bulls need strong follow through. So one thing you can do for always in trading is what I'll do, a little bit aggressive, but I'm going to buy the close if this bar closes reasonably strong. And I want the follow through to be relatively quick. My stop is just below this bar. So basically my stop's right there. And the reason for that is my premise is wrong if it goes down here. Really, my premise is wrong if this bar closes on its low. So I'll get out of the trade if it closes something like this. So what I'll do is maybe I'll take part off at 1 times my risk. So here, I'll just put a stop somewhere, I don't know, up here. So I need this bar to have good follow through. And if this bar takes too long, I'll exit. If I'm buying a breakout like I did on 48, I want the bar to race up and go my way. So Oliver says, I assume that some bears sold the high of 41 right here and noticed that the gap was kept open by 1 tick. So it was here, which made me more confident buying above 47 here, thinking trap bears would exit as well. Yeah, that is significant. So bears sold this high, scaled and higher, tried to get out break even, and they gave up on a second entry buy above 47 here, which will lead to this big bull bar. So that is certainly significant, to say the least. So for the bulls, they have to wonder, why is this bar taking so long? If this is going to be a strong entry bar, why is this taking so long to form? I've been long for 4 minutes, and we haven't gone anywhere. So if you're thinking about the bull perspective, you have to be thinking, something is not right for the bull case. And that probably means that the market is in some kind of a trading range and not in a strong bull trend. Obvious target above the close of 37. So what I did here is I put my stop 1 tick below the bear bar, and I'll take a chance that we get a second leg up. What I'm paying attention to here is I don't want to see too much selling at the close of this bar. So I got out of break even, and in part, it's probably going to go a little bit higher, but my issue is, 1, it's buying in a dangerous area, and 2, the follow through on 49 is bad. Therefore, the second leg up is probably going to be limited, and it makes me think the market's going to go more sideways. But a lot of traders, what they will do is if they did buy, they'll buy and put their stop 1 tick below and hold, betting that would get a big second leg. But to me, if the market doesn't race far above it, then it just makes more sense to just get out right there. So I think for a lot of traders, it makes sense to exit below 49 if it triggers, especially a second time. And the reason for that is it's now a micro double top, up and down, and then up and down again. So not ideal. There you go. So if the Bulls had too many chances to get out, break even, and they could not make the market race to the upside. So now we have two legs up, testing the close of 37. Actually, we didn't quite get to close at 37. So probably more sideways here. Testing the gap, the 45 high and the low right here. So what do always in bears do right here? Well, it's a micro double top. I think it's okay to get out of shorts below 50. So why did some bulls buy right here? Some traders bought betting that the market would not get another bear bar. So if you're a bull, you do not want traders giving up here. So one thing you might do is buy the close of this bar. So buy the open, put your stop 1 or 2 ticks below 50, betting that and basically trying to force the bears out. This is a possible second leg trap, but the bulls are forming open gaps. Open gap here, open gap here, increases the odds that we're going higher. 49 is a warning for the bulls. You know, one has to ask, if the bulls are so strong, why is 49 a bear bar? And that's because traders were not willing to buy the 49 close. What about selling? Somewhere up here on the limit order. I think the problem with that is I'm interested in selling. My problem is because it's 3 legs up, leg 1, leg 2, leg 3. So my preference is to sell up here, but my problem is we have an open gap and an open gap here. And while the bears will probably make money, to me, it's a more challenging short because there's the added risk that the bears get trapped. So look what happens to high close here. The bulls that bought and scaled and lower are getting out break even. It's kind of an expanding triangle on a smaller time frame. 49 was also a warning that there would be sellers at a new high, which is in part another reason why the bulls who were long up here took profits. So if I'm an always in trader, I'm probably trapped out. I want to be careful about trading second legs, and I especially don't want to trade third legs. And to me, this is 3 legs up. Leg 1, leg 2, leg 3, or you can argue kind of a complex 2 legs up. Leg 1, pull back, leg 2, leg 1, pull back, leg 2. So probably sideways in here, more so than much more higher prices. Now, if I had chose to stay long, well, I said that if I was still long from this trade, I would have gotten out below that bar, so I wouldn't have been long here. But if I was long, I would get out below 50. To me, it's too much risk that we're at the top of the trading range, and this is a second entry short, and we could easily collapse down to here. Therefore, that is not an ideal place to be long. In a trading range, it's important not to buy high. So you have to have a way to exit at the top of the range. That is a problem for traders. I think a lot of bulls you may see this bar just sell off. So a lot of traders will sell this close, betting that the market's going to fall below 50. So they're front running. You have a lot of bulls. If they're long here, instead of keeping their stop below 50, they may just say screw it and sell the close and protect what little profit they have. So that increases the risk that we break the downside here. For the bulls, they're trying to defend this breakout point. They have an open gap. So they'll say 2 legs down, they want a second entry buy and an upside breakout. Some bears who sold down here, same thing with the bulls that bought up here. Some bears that sold here may have sold more above here and somewhere in here. That increases the risk that we have to sell off and allow these bears out break even. Just like the bulls that bought up here and bought more somewhere down here using a wide stop, they were able to make money on the trade and especially avoid a loss. I think these bears who sold down here and scaling higher, probably to stop somewhere up here, are going to be able to avoid a loss, which makes me think that the odds are higher that we've got to pull back, maybe the 48 low. So I thought on 48 it was a strong enough bar to lead to a second leg. And in part, we closed above the moving average, so that's good. Here, we did not close that far above, so not ideal. But strong enough bar, disappointing, but still probably going to at least get a little bit higher. And obviously it took too long. I got out here during this bar. There was a reasonable probability that the bulls were going to get a second leg. It diminished through this though. Then the odds, now I think they're starting to favor that we may in fact have to test the low of 48. I'm less confident about that with the open gap here and this red line, which is another open gap. That is the formula for a small pullback trend. And for me, I actually wanted to sell during 51 up here, but I just can't do it. Even though it's 3 legs up, there's a risk this resets the count and it's a measuring gap. So for me, I'm trapped out. What about buying if this bar closes on its high and is a bull bar? It's a second entry buy, but it would be a second entry in the middle of the tight trading range. And the probability is less in favor of the bulls now than it was on 48. 48, the bulls had a chance to break out to the upside, and they failed. So that makes me think that the market's going to go more sideways here. So there you go. A doji bar, 2 legs down. But not ideal. Some traders will buy it, maybe put a stop point below this breakout point, and they're hoping that we race to the upside and that the bears get trapped. Bears that sold here at the high of 45, scaled on higher, they had one chance to get out on 52. If they didn't take it, then that would be problematic for them. They may give up here and the market races to the upside. I still think we may have to get up here as well. This is probably exhaustion, and if it is exhaustion, we'll probably go above it. Bulls trying hard to get up to the high of 37. So I'm more interested in buying than selling, but I need the bulls to close. I need the bulls to show more signs of strength. It's too much risk. This is a test of the 38 high, and I suspect there's sellers at the 38 high. And then we're going to evolve into a trading range. Therefore, I want to be really careful about not selling, about not buying too high in what will likely be a trading range. I would normally be more willing to sell the close or sell during this bar as it goes above 51 for a test here. But my concern is, again, this red line. Make it purple to stand out. Too much risk that this may be some kind of measuring gap. And if I'm a bear, I don't want to get trapped. So my concern for the bears is that it's possible, there's a few things. One, we're probably going to test the high of bar 11. So we could easily break to the upside and get to here. Bar 11 was a reasonable buy signal, even though it's kind of a parabolic wedge. 1, 2, 3. Some traders would buy in this area. This is enough buying pressure that one could argue the market should have gotten the second leg up, and it didn't on bar 20 and 21. It trapped all the bulls that bought the 18 low, scaled in lower. It trapped them. Therefore, the market will probably come back to this area and let those bulls out. But in order for the market to do that, we need to see signs of strength. So 53 closed. Let's see, did it close at the high? It closed at the high of 51. Lowers the probability of the breakout. So next, can 54 close above 53? Can 54 close above the 39 high? The market's trying to form another second entry short here. It would actually be pretty interesting. So it would be 2 legs up, bull breakout, and then another 2 legs up. So we call it a low forward at a target. If this bar does close on its low, I think a lot of bulls would exit 2 legs up. So we call it a low forward at a target. If this bar does close on its low, I think a lot of bulls would exit. So it'll be interesting to see what this bar can do. Will this bar close on its low, or can the bulls get this bar to close somewhere up here and increase the odds of higher prices? We're always in. If you didn't get out below here, some traders are still long, and maybe their stop is below 52 or 53, and they will exit below the bear bar. And the bulls that are staying long, they're hoping for the upside breakout. It really is easier for most traders to focus on swing trades and using tighter stops. It's easier to make the math work. When you use a wide stop and scale in, you'll have more, it makes it, your probability will be higher and you'll have less losing trades, but it's more challenging to do. 54 is a follow-through bar after 53, increases the odds of higher prices. So you'll see some traders buy the close, hoping for a quick upside breakout, and maybe their stop's below 54. They're using a tight stop, hoping for a quick upside breakout. Bulls trying hard to get the breakout. I think the next target is going to be here, around the 18 low. So why not buy on a stop above 54? Well, it's a possible trap. Or, you can call it a wedge. You can call it a low forward. 1 push, 2, breakout. So that's 1 push, another push. So now, possible failed breakout of a double top. And the question is, so this is a problem for bulls and why it's generally better to wait. Go right back to the 49 close and think back to what I said on 49. I said that was a problem for bulls. It was a problem for me. And if I was long, my hope was that the market was going to race up. And 49 was a bear bar. And it was a warning to bulls telling them that this is going to be more of a trading range. So that was 49, and now we're on 55. So that was 6 bars later. We're still right. We raced, this bar went right back to the midpoint of 49. It's a warning that the market's going to have a lot of trading range price action. It's really, really important not to be aggressive and buy too high in a trading range, sell too low in what's likely to become a trading range, because it's really easy to take a lot of stupid trades and get down quite a bit. I have not done anything in my personal account since this bar. I was long through this and I took profits on this bar. I wanted to sell here during 51 as it went above 48, but my problem was this purple line, this open gap, and I wanted to buy if the bulls could have gotten more buying pressure. But my problem now is it's 2 or 3 legs up, forming a double top of 37, so probably a few legs down, and probably going to get to this purple line right here and close this gap. Always in bulls exit below 55 and aggressive bears sell. I still think the bears that sold here and more up here are going to be able to avoid a loss. So that, again, that makes me think even more that the market's going to go sideways somewhere down here. Not making it easy for stop entry traders. You know, I'm trying to think of always in and an entry for always in, but I'm having trouble thinking through one. You know, I'm not willing to buy up here. I'm not willing to buy high at the top of the trading range because I'd be forced to get out below 55. I don't want to sell below 55 because it's a big doji bar. But my problem with 55 is there's too much risk for the bulls that it's going to lead to a couple legs down. So this is why a lot of traders prefer to use limit orders in this scenario. Because by the time the stop order sets up, it's forcing you to sell low in the move. I think the reality is a trader that sells here and puts a stop up here is going to make money. Therefore, I think we're going lower. So we have a wedge. 1, maybe bar 10, 28, and 40. So something like that, although it's not great. You can also say that it was a failed breakout of a wedge. So 1, 2, 3, or 1, 2, 3, kind of like this. And then there's the failed breakout. It doesn't really matter. So the target here was a test of 37. Since it is a wedge, you have to be thinking about 10 bars, 2 legs, and half the amount of bars that were in the wedge. What that means is half the amount of bars in the wedge is, it might be more than 10 bars. So if it's a 15-minute chart, 1, 2, 3, maybe a 10-minute chart, better yet. This might be leg 1, pullback, leg 2. So where I'm getting at is this might be the first leg of the correction, deep pullback, second leg up. The bears, they want a double top and a measure move down. So they probably won't get it, but they want something like this. They want a strong sell-off and a crash late in the day. More likely, we've seen the low of the day. And if we haven't, more likely the market's going to go sideways down here. Important to notice one thing about this rally from 40. The bears have not made money on a stop entry. So the bears haven't made money selling below a bar since 39. That is a sign of a small pullback trend. Small pullback trends, it's very common for stop entries to consistently fail and the market keeps going up. And you can just look at the pullback, sell below here, get stopped out, sell below here, stopped out, sell below here, and not that simple. So the bears, I will become more interested in selling if I can see the bears make money on a stop entry. You know, just like this strong breakout, bulls made money buying above this bar. Probably didn't make money buying here. They made money here. They clearly made money buying above 36 here. It led to buyers below. Bears haven't made money here, so not many sellers above here. Bears, they didn't make money in here. There were sellers above here, but not much. So if you sold here, better yet, if you sold this high right here and more higher, you can see that the market's hovering around that price. So not ideal for bears. For the bulls, though, you're getting a lot of overlap, and that increases the odds that the bears get a downside breakout. So bears, some bulls giving up. One thing that some traders will do is you see a bar like this. See a bar like 55, strong enough bar for a second leg down. But a lot of traders, instead of selling the close because of the tail, they want to see what the entry bar looks like, the follow-through bar. This is a bad bar to buy. Therefore, you'll have traders say, well, if it's a bad stop entry buy, it's a good sell the close bar. So some traders sell the close, which is what led to this. So look what's happening here. What did I mention about this sell-off? I said that a lot of traders, I said that it's reasonable for bears that sold here and anywhere higher using a wide stop probably will be able to avoid a loss. So some traders, maybe they sell here, sell more above this high, anywhere, they are able to avoid a loss, which is what and that is why we sold off. We closed this gap here and found buyers. Other bears, they sold this breakout point here, got trapped. They used this bar to exit break even. So for me, this is a sign of strength by the bears. And that is reminding traders and warning traders that this is most likely not going to lead to a small pullback trend. So do you sell the close? What does an always-in trader do here? Well, the problem with an always-in trader is they're a stop entry trader. And stop entries are not ideal in the middle of the trading range. So for me, if I'm trading with stop entries or wanting to sell the close of bear bars, buy the close of bull bars, I've got to wait for signs of strength, and we're not getting that here. The bulls are trying hard to keep this negative gap open. So you can see this gap is still open. We go to do like this. So do you buy the close of this bar if it closes as it is? Well, I suspect you probably can, but again, it's buying at the top of the trading range. So probably better to buy it than sell it, but there's the added risk that this is a breakout pullback and this bar closes on its low. So 3-bar micro channel, probably that should do nothing, but there's probably buyers somewhere down here. So I suspect buyers below 56 scaling and lower. Some of them would be getting out right here. I still have not done anything since getting out, taking profits during this bar. This is becoming an expanding triangle. So here and here, and we're in the middle of it. So not ideal for anything right here. So this was my concern about buying the prior close. It could be a pullback from the prior bar. So it's a micro channel since 55. What do you do below it? you can sell it taking a chance that we break to the downside, lower probability. I think it's probably better for most to do nothing here. You know, if I had to do anything, I would probably, I don't know, I don't like lower probability trades in general, so I'm resistant to selling below 58. So for me, I prefer to be flat, and I am flat. You know, typically what I do, just to give you perspective, is I bought the close of 2 and scalped out. And I'm pretty, on the open, I'm pretty aggressive, and I'm really quick to take profits, especially if it's within 6 bars, because so much can change so quickly. So I bought the close of 2, and I think I just took 4 points. And I sold the close of this bar, and I had a, you know, just really wide, I mean, I had to stop all the way up here, and I was willing to scale in at least twice. I did the same thing, and then I took profits on this bar, and pretty much did the same thing for these 2 bars. And trying to think of what else I did. I think I sold once here. I can't remember. I bought and then I would typically look to sell a bar like this or sell below that bar, 3 legs up, tight channel, probably going to get a second leg down. And, you know, really the dumbest thing I did, at least it was on simulated, so it wasn't real, was the trade I took in the webinar. And that was buying here and getting out down here. Because really, the way I normally take those trades is, you know, some kind of stop way down here. So prior leg, or if you're buying the close, stop down here. And your protected stop is basically a measured move down. So you buy here, buy more at the low of the day, and you get out break even. Now with that being 3 legs up, it really made more sense just to get out and buy more later. But, you know, I'm happy with what I did in the beginning of the day. And in situations right here, I'm a lot more resistant to wanting to do anything. And it's real common for the day to get smaller as the day goes by. So the problem with that is it's really easy on the open. And this, again, goes back to why I say be careful about the trading range open. It's so easy on the open to take a big loss that you're just not going to make up. And as the day goes on, the range gets tighter and tighter, and it becomes more and more difficult to make money. So the problem here is, you know, it's a buy below this bar, scaling lower, sell above these highs, scaling higher, buy below these lows, scalp out, and it's really easy to screw that up. And it's easy to buy here, you know, you're long here, and then you get a downside breakout, then you got to take a loss. So I think that most traders should really try and focus on understanding the open. And the way I do that is I think of the day as being either 2 kinds of days, a trading range open or a trend from the open, or an opening reversal type of day. And for here, I need a strong bear close and follow through. Then I'll think about selling. My issue here, it's a micro channel. That's good. But my problem is bear bar, doji, bear bar, tail, another bear bar, 3 pushes down in a smaller time frame. So since there's a little bit of time to talk about this, let's see. I want to see this where I can buy the close, or I want to see something like, you know, here, sell this close, and then big bar, buy closes. I'll come back to that. So what do traders do here? Well, you can sell the close on 59, betting that we break to the downside. And if you do sell the close, it's pretty simple. One way you can do it is the lower probability, but you just sell and put a stop up here. I really am resistant to selling this close because, I want to sell this close, put a stop here, and to show the point that you get out above this bar. But again, my problem is it's the third leg, and it just seems kind of like a stupid thing. Why not just wait for another bar and see the follow through? So, I think it's perfectly okay for traders to be short here and use a tight stop. Just put a stop up here, put a stop up here, and just hold. Give it a bar. And they'll probably be okay doing that. That is just not my favorite trade to take. Just not my favorite trade to take. Notice the traders that sold the close of the prior bar. They're starting to get follow through. Let's see if how much this bar pulls back. So if this bar closes on its low, I think it's reasonable enough to sell the close. But it would be the 6 bar in a micro channel, lowers the probability or increase the probability of the market going more sideways is a better way to put it. So here we are, we're 3 minutes into the bar, 2 minutes into the bar, and we're reversing. That was why I just couldn't sell the close. I wanted to show the point that you could sell using a tight stop, but why do it? It's kind of dumb. It's an expanding triangle. And I just don't want to be doing something, basically right here. So I am still trapped out for good reason too. On sell-off, bears scaling higher. You have bears deciding, what to do here. Any one of these lows is a magnet that's going to find buying pressure. So some bears sell this close, others sell the high of this bar, buying pressure right here. Some traders, they sell the midpoint of this bar right here, buying pressure, more buying pressure. So I think we're going more sideways. It's possible we get down to the 4-day close, but I don't think all that likely. Just look at a 60-minute chart. 3 pushes down, breakout follow through, bad, strong reversal bar. What are the bears going to do down here? I think a lot of bears are going to look to take profits. So I think it limits the downside. So we'll watch what happens at the 59 close. Some traders will just buy back shorts really quick on this open of this bar, anticipating that the market may not go much lower. Not a great signal bar though, so probably going more sideways. It is the parabolic wedge, 55, 57, and 60, but it's a very tight channel. So parabolic wedges are typically minor. Here's a 10-minute chart, and you can see 3 consecutive bear bars. So probably buyers somewhere down here. There might be, those buyers may not come in until the 48 low, but they're down here somewhere. Lower probability that the bears get a breakout below, they see this bull flag, so rally, this is the bull flag, bears get a breakout and a measured move down, and this might be what's happening right now. So it's important to pay attention to this bar and see what kind of follow through we get. I'm looking to buy, but to me this is becoming too strong. I'm looking to buy because we're at the bottom of a trading range. So I want to buy the low bars like 48 low, the 46 low. But my problem with it is how tight the channel is. It increases the risk that this is the give up bar and we get a second leg. More likely though, the next bar will have that follow through. So 61 is a breakout, but let's see what 62 looks like. So far it looks like traders are giving up. You can see on a 1 minute chart, decent entry bar. Let's see if this is another decent bar. So a little bit of tail. So reminder, we're pulling back a little bit during this bar, and that is disappointment. This is why I want to buy, but I suspect I'm not going to buy with the bar being this big or strong. So for always in short traders, what do they do on the close of this bar? Well, some traders will sell if this bar closes on its low. There is the risk that it's a second leg trap, leg one, pullback, leg two. Just look at this bar and ask yourself, why is it pulling back so much? And the reason for that is this is a warning that there's something wrong with this bar. And that is problematic for the bulls. It's going to be problematic for the bears. This is a pretty deep pullback. So not ideal. So if anything, this bar might be more of a buy the close bar than a sell the close bar. But it is a micro channel since 55. So I'm not willing to sell this bar if there's a big tail on it. My other problem with selling is the day is already so big that it's probably not going to get much bigger. It might, but probably won't. So to me, that is more of a buy the close bar than a sell the close bar. Well, I actually bought the close of the bar in my other account. For the bulls, the bears want a bear breakout and follow through and a breakout below 40. The bulls want higher low major trend reversal. So they want big bear bar on 61 to have bad follow through on 62 and to lead to a second leg trap. Leg one, pullback, leg two. So far, ever since bar 21, breakouts have had bad follow through. So if you ignore this, look right here, big bar, bad follow through. Bear bars, bad follow through. Bull bars, bad follow through. Sell off, bad follow through. Big bull bar, bad follow through. Big bear bar. What do you think is going to happen here? Is this going to be the bar that represents the bear trend? Probably not. This is probably going to be the bar that continues to have bad follow through, just like we've had bad follow through for the past 40 something bars. So for me, I bought this close, maybe a couple ticks under the close, and I have a target basically at the midpoint of the bar. Why not just put a target up here? The channel's pretty tight, and if I get out at the midpoint and I want to buy again, let's say if this bar closes on its high, I can always just re-enter. Some traders sold the close of 61, disappointed 62. You can see them trying to get out break even. So I just took part off, and I'm going to take the rest off at the high of this bar. I changed my mind and split the position up into two when this bar closed as a bull bar. So continued disappointment for traders. part of the reason why I wanted to buy down here was this situation here. The bears that sold, scaled on higher, they were disappointed here, and they were using this to get out at their lower entries. The bulls that bought a pullback from this rally, they're in the same situation. So they're going to use any bounce to probably exit longs. And that is what continues the evolution of a trading range. Disappointed traders. My hope is that we break strongly to the upside. So this is a terrible environment for always in trading. And this is why a lot of traders do not trade always in. They pay very close attention to it because it's really important to understand. And to really sum it up, the most important thing most traders can realize is that whenever you see something that's a leg one, that's something that resets the count. In other words, strong enough sell off, probably the first leg, then you're going to get 2 or 3 legs down. So breakout follow through, strong enough to reset the first leg, expect 2 or 3 legs down. Probably this is leg 1, maybe leg 2, then this resets the count, so leg 1, leg 2, leg 3, 2 legs up, and maybe this is leg 3, then you get another rally, so maybe this is 2 legs up, leg 1, pull back, leg 2, and the point is okay, I'm out of the trade, so my second position just got filled. But the point I'm making is to be very much aware of, don't fade third leg. Be very careful. Whenever you think something's a wedge or 3 legs, don't fade it because there's too much risk that it's going to pull back. So again, forcing traders to buy high. If I'm an always in trader and I want to buy, I'm being forced to buy after a micro channel and a fairly tight channel since 54 or 55. And that makes it very difficult to trade that way. And just think about it. I'm talking about always in the room. So my choices for always in is buying above a terrible signal bar, buying the close of this bar, which is not ideal. And from a limit order perspective, a limit order trader, my other account, I bought this close here, got out here, and the rest here. I'm doing the exact opposite. So I think that's a constant struggle for swing traders in the trading range is, that is a challenge. But I'm going to, if I can do this in time, to me this is strong enough that for an always in trader, if I'm trading with stop entries, I'm willing to buy. Okay. I just bought. And same thing as always, stop below 20. So my stop's right there. And I'm holding. First target, probably the high of 38. So notice the follow through. So far, good follow through. I'm happy about that. And for me, as a default, here's a high. Reasonable take profits at 40 even. For me, this is my target. One of my targets is the 18 low. And the reason for that is that's where traders got trapped. So I'm going to instantly sell out of one. I didn't expect that. I want to lock in the profit that I have. So I made something. And always in, I'm just going to hold. So I'm going to be kind of Forrest Gump stupid, if you will. And the way I do that is just stay in the trade. No reason to exit. So maybe I just move my stop to break even here. Now my trade's at basically break even. Of course, I messed this up. I forgot to, a little frustrating, I forgot to buy the actual account I'm trading. I meant to buy the close of that bar and got sidetracked with what I was doing in the room, but that's okay. So I need to think about how I'm going to get long in my actual account. sometimes if I want to get long, I'll flip to a 1 minute chart and I'll just buy at the market. And I use a really wide, I'll just use a wide stop. I'll just buy at the market. And I use a really wide, I'll just use a wide stop. So notice what happened back around this blue line. Disappointment. So one way I'll trade is I'll look at a 1 minute chart like so, and I'll use it to kind of think about, okay, this pullback was pretty deep. Maybe I'll put a target, you know, a little below this high, so somewhere around here, 43 even. And I would just scalp out right back at that high. Now what I'm going to do in this case is I'm going to hold long because I'm trying to show always in. And always in by definition is being forced to be in the market when it makes sense to. So I'm going to stay long and wait for this bar to close. You know, I think the longer someone trades, the more they will micromanage trades. Give me just a second. All right, everyone, I'm back. Thanks for being patient with me. So overall, I had to step away for a few, so I actually just got out. I don't remember where, maybe when it's going down. But typically, when you get a bar that reverses this much, and it was forming a double bottom, so it was an okay buy, strong breakout. And, you know, typically in a situation like this, you can buy more lower, and you get 3, 4 bars sideways. A lot of traders just get out. And the other issue is, maybe if I can get it drawn, right here. So what did I mention about the 18 low earlier? I said that this should have been support. 3 pushes up, 1, 2, 3. It's reasonable, although it seems crazy, it's reasonable to buy the 18 low and scale in lower. They obviously got trapped on 20 and 21. So a lot of those bulls would just take the loss. However, the market has memory. Therefore, this low is going to act as resistance at some point, and it'll be a magnet. Came close to it, turn, hit it, turn down. Just like over here. This is resistance right here. The market tried to test it, sold off, test it, sold off, broke far above it. Well, what's it going to do? It's going to act as support. So late enough in the day, sideways, more of an expanding triangle here and here, here and here. So probably best to do nothing. My last trade in my actual account was, trying to think, I think I bought the close of this bar and more lower. No, that's not true actually. What I did, I bought basically the low, even though it's kind of extreme. I bought the low of this bar right here, or maybe during this bar. Scalped out for a small profit, and then so I basically did that, and I bought more. What was this during 1350 bar, which is somewhere over here. So I basically bought somewhere again down here, and got out of basically back at the high close here, and I think I took everything off around the high close. And that's the last thing I've done. I'm not going to do anything else too late in the day. I'm happy with what I've done. I don't want to screw it up by doing something dumb at the end of the day and giving it all back. So for me, this is not what I want to see at the end of the day. So I think better to just wait and do nothing here. So daily chart. more continued tight trading range. The market gapped up, and it's basically, it's forming a tight trading range, forming an expanding triangle, testing the high close over here. The market gapped up, sold off pretty quick on the open, and this bar was pretty big from the get-go. So pretty big sell-off, pull back, and then down here, the range is getting pretty extreme, where the odds, you have to be thinking about the possibility of getting some sort of a tail. And typically it's common when you get a big sell-off to have pullback in the middle of the day. So the day gapped up, and bar one tried to form a trend from the open with bar 1 and 2. Market sold off. And on the open, I kind of saw it as a parabolic wedge, 1, 2, and 3. One second. So on the open, it's really important to remember that 50% of the time, it's just really common to get a major reversal that can be a lot deeper than what traders want. So whenever you see a bar like bar 1, a doji bar, your radar should just be flashing in your head, flashing red lights, thinking trading range, trading range, trading range. Don't be fooled into thinking that, okay, we have a gap up in bar 1 doji, but bar 2 is a big bull bar. This has to be a bull trend day. It does not have to be a bull trend day. And in fact, most days are not bull trend days or bear trend days. So for me, I'm always suspicious of the first 6 bars of the day, 12 bars of the day, always. So when the market gapped up, let me do it like this. I want to make it more. There we go. That's good enough. So there we go. So bar 1, big doji. So what's the one thing we know? We know that the market sold off and the market rallied. And we also know that the market sold off into the close of the bar and closes the doji. Therefore, you always have to be wondering, there were buyers below here. There's probably sellers somewhere up here. So why not sell the high at bar 1 and use the stop and measure move of the bar? So here to here, measure move up. Well, the problem with that is you're probably going to get a measured move of the first bar of the day. You know, the range is tiny. That's like saying that this bar is going to be the range of, we're not going to get a measured move up. Well, the fact is, the range, we all know the range is going to double, just like the range is going to double here. We could go up a little bit and we could go down a little bit and the range would double. Therefore, the only option on 2 is to buy the close, stop below 1, or do nothing. Feel water. Now, with bar 2 closing on its high and bar 1 being a doji, there will be plenty of traders who will scalp out, who buy the close at 2, for the simple fact that they know that bar 1 has sellers above. They don't know where the sellers are, but they know they're somewhere. So that's why bar 1 is just a really important bar. Look at Al's video course, look at the videos, just listen to some of the old webinars that Al does, and just even the current webinars he does, and you'll hear him give so much input to the first couple of bars of the day. It can really tell you a lot about the day. So bar 3, what happened? Well, everybody bought, but then they scalped out. So what does that tell you? Just like right here, this bar sold off and it found buyers. What does that tell you? That tells you that there are traders who are buying, they're scalping out of the trade. So that lowers the probability of buying up here, and it increases the probability that we're going to see more sideways trading. Bears, they sold, they scaled in, made money. So bar 3, is it strong enough to reverse 1 and 2? Well, probably not. And there's probably buyers below the 3 low, there's buyers below the 2 low, buyers below the 1 low. But what's the one issue you see on this chart? And I forgot to mention it, but it's a micro channel from the, let me see if I can blow this up a little bit. Let me do it like this. I want to get the numbers out of the way. This is another thing that I wish I would have mentioned. So let me do ES.D. Yeah, here you go. So this is a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bar micro channel on the open. And that also lowers the probability that bar 1, that bar 3 is going to have a pullback and lead to a second leg up. It increases the odds of some kind of reversal. Give me just 2 seconds. I want to actually make a note on that. That's just really subtle in that this does not happen that often, the 13 bar micro channel. So I want to document that. One thing I challenge everyone to do is try and replicate, build your own encyclopedia, build your own, scroll through days, find examples of things, think through charts. That's how you get better at this. So bar 3, most traders, a lot of traders, it's reasonable just to exit because of this doji. If you include the micro channel in there, it gives you that much more reason to exit. But a lot of traders would get out below bar 3 and they would wait. So reasonable to get out of longs below bar 3. I don't know, do bear sell? Some might. It's a wedge. 1, 2, 3, 13 bar micro channels. And over here 72. Probably going to test the 1 low. Therefore, reasonable to exit. Bar 4, is it always in short? Probably. Strong enough breakout. Probably always in short and probably going at least a little bit lower. So sell the close bar 4, tail on top, and traders that bought here or here probably will make money. So you have to be expecting more sideways than straight down. Bar 5, bear bar, consecutive bear bars, probably sell the close going at least a little bit lower. And then 6, another big bear bar. Undoing all of this, one possibility is the market testing back to the apex of this high trading range, which you can see it did right there. But still sell the close 6, stop somewhere up here. Probably first reversal up will fail. 7, an inside bar. Possible 1 bar final flag if we break below it. But even though the bulls bought and scaled in lower, made money, this is just too tight to be buying. Any reversal up is probably minor. Some bulls bought the 1 low, scaled in lower. They're trapped. They'll use any bounce to exit break even. But all of these closes will act as resistance. Bulls bought this close, trapped on the next bar. Maybe they bought the bar 5 close, scaled in, trapped on the next bar. Any one of these could be resistance, just like the bar 1 low will be resistance. Bar 8, another inside bar. Now you have consecutive inside bars. 9, bear breakout. Testing the low of 76 in this tight trading range in here. Possible reversal up on 10, but it's a micro channel down. So you have a 13 bar micro channel here. And you have an 11 bar micro channel down. So that's pretty interesting. 10 consecutive bear bars. Still sell the close, but it's coming pretty extreme. It's also a parabolic wedge, 1, 6, and 10. So at some point, you have to be thinking about the possibility of a test up to the 9 high, the top of this leg, or the apex of this triangle. And in fact, I do think you're going to get here. I just don't know the path. Do we go, do we get a bull bar and then go up there, or do we stall, get another leg down, and then go up there? So 10 is sell to close, but it's dangerous. Whenever you get 2 or 3 pushes down, especially when you get a wedge bottom, the odds significantly start to favor 2-legged pullback more so than prices in the same direction of that trend. So most traders should wait, but it is still sell to close. And if you sold that close, what do you do on 11? Well, some bulls exit above the bar. Some bears exit above the bar. Other bears, they sold the close at 10. They'll try and sell more above 11, and maybe they look to get out at the midpoint, somewhere in here, or they try and get out at the close. They're disappointed. They sold the close at 10, disappointed at 11. They'll try and minimize their loss. And that's what they did a little bit on 12. And then 13 went below, triggered below 1, below 12, and went below 10. And look what it found. It found buyers. So now we have a micro double bottom down on 10. up on 11, down on 13, up on 14. The bulls want an upside breakout and a test of the 8 close and 9 high, and they'll probably get that. So for always in traders, I would get out. Most always in traders get out above 14 and wait. What about the bears? Bears get out as well. Now 15 is technically the second entry short. However, it is a bull bar, and because of that, that increases the chances that there's buyers below. Yes, you could say low too short in a bear trend day, but to me, this is not a sustainable bear trend. This has buying pressure here, starting not really buying pressure here. So that makes me think that the downside is still, it's gone too far too fast, and it's going to at least need to pull back for a few bars. That does not mean major reversal. It just means probably a minor reversal. 16, 3 consecutive bull bars, 4-bar micro channel, but testing the moving average, testing the 6 close. Some traders bought the close at 6, betting exhaustion. And what are they going to do if the market gets back to it? They're going to sell out of their long, and that will also create resistance. The bears know that. They're going to sell. So 2 legs up, you can argue a wedge. Okay to sell the close of 16. It also went above a bear trend bar. So until this point, the market has not gone above a large bear trend bar or any bear bar. So the first bar that the market goes above, traders will sell it. And you can see, you could argue that it's a bear bar, but it closed above its midpoint. Not ideal. Finally went above a bear bar on 15, so there will be sellers up here. And you can see that pretty well on a 15-minute chart. So here's that bear bar. The market went above it, pulled back a little bit, then went further above, sold off. Not mean to do that. So 17, second entry short. You take it for a sell, betting on a downside breakout below 13. You can sell below 17. However, not really ideal. Probably going to get another leg up, and it's also a 4-bar micro channel, so probably buyers below and another leg up is likely. Plus, we still have an obvious target above the apex of this small triangle, which is this red line here, and the top of the 9 high. 9 was probably exhaustion here, so the market will probably have a deep pullback, and that's what you got. So what do you notice about this rally? Bad signal bar here, bad signal bar here, and just a very aggressive looking bar. What do you notice about this sell-off? Well, it's easier to get short in this direction, much more difficult to get long here. You see a great looking bar like 18, and it forces you to think, wow, what a great bar. I got to buy the close. This is going to break to the upside. It's a bull breakout of the flag. So here, probably going to get a measure move up. And that's just not true. This is the third leg up. 1, 2, 3. And for those of you listening to this right now, I would highly suggest writing this down and thinking about it. Why do traders exit after 3 legs? In other words, to state that is, you want to make it real simple, don't trade the third leg. So when you see 3 legs up in a likely trading range, really when you see 3 legs up in anything or 3 legs down in anything, be very hesitant to trade in that direction. And the reason is, most of the time, it leads to a pullback. So 18, not strong enough to reset the count, possible third leg up, testing high of 9, bear bar, 19. And that is what I screwed up here. It's arguably 3 pushes, 1, 2, 3, 2 legs up, testing the moving average, hadn't touched it in several bars. That was just a dumb place to buy. And it was poor management, but I'll talk more about that in a little bit. So reasonable, always in bulls, definitely exit below 19, aggressive bear sell. And if I can hit the right button, good entry bar on 20, good follow through 21, expanding triangle. So you have to be thinking, and it's also kind of an expanding triangle here. 1, 2, 1, 2. It doesn't look like it, but it is to a degree. We'll see one thing actually. 1 second. So what about 21? Is it sell to close? It is sell to close if you can use the wide stop. Sell to close, first reversal up probably will fail. And consecutive bull bars, this bar went above the prior, so a little bit of a warning that the market's probably going to start going sideways soon, but still sell to close, sellers above here, sellers above here. The pullback may be deep. I mentioned here that it is reasonable to buy the 18 low. A lot of traders, when they see a bar like 18, they'll just hit sell to close, or they'll sell the high of 16 during 18 and scale in. I was one of those traders. I sold during 18. And my logic was it tested the apex of this consecutive inside bar here, and it's 3 pushes up in a tight enough channel, it's probably going to get a second leg down. So I thought it was reasonable to sell here, and I got out at the low of 18. And the reason for that is I thought there might be buyers at the 18 low, and the market would go sideways. And you can see the market broke far below the 18 low, and there were not buyers. So that will trap some of the bulls that bought this low, which is what caused the market to retest it later in the day. Channeling down, but you can see channeling down in a weak way. Strong enough breakout, probably, you can argue it reset the count, so that's leg 1, leg 2, leg 3. Most traders should think about exiting after the 3rd or 4th leg. Now, if the bears are trying to get a small pullback trend, they have a low 1 short on 23, but the bull doji, and then 24 is the second entry buy attempt. However, it's a weak signal bar. Most bulls are not going to buy above that bar, and most bears know that. So what are they going to do? They're going to sell the close aggressively. The other problem is this is a strong enough breakout. You're probably going to get a bigger second leg down, more so than just price not even going 1 tick below 21. Let me check one thing. So if you do have questions, comment in the GoToWebinar on the webinar question box, and I'll answer them. 26, 4-bar micro channel. You can argue second entry buy with 22 and a second failed breakout of the 10 low, but it's a small bar and the channel down is pretty tight, so not ideal. Bulls have not made money buying above a bull bar since arguably 16 or 17, so it's been quite a few bars since the bulls have made money. And 27, another bear bar in a micro channel since 23. So is it sell to close? Not really. For me, I think the odds favor a reversal up. Buying pressure here, 2 or 3 legs down. The odds favor sideways in here more so than a down breakout, than a downside breakout. Bad follow through 28. This looks like the leg in a trading range, and bulls will be quick to exit. Most traders should just exit above a doji bar, and certainly above a bull bar closing on its high. And then another doji, and then a bull bar, and then a bear bar, and then everybody gave up. So what happened here? Well, you had an outside bar, and then an inside bar, and another inside bar. Well, not really. You had an outside bar here, and then an inside bar. It's tight trading range. And you can argue final flag, you can argue failed breakout of a bear flag, and then an upside breakout. It doesn't really matter. The odds are this sell-off from 23 to now to 30 is going to go sideways. 32, is it a strong enough breakout for a small second leg? Probably, but the channel down is tight. The bulls need to get consecutive strong bull bars. They have consecutive bull bars here, but you have to ask, why did 33 not close above the 32 high? And the reason is that's because the bulls are not strong enough, and it's a sign that the market's going to go more sideways. Bear bar 34, but probably buyers below 35, breakout below 30. So now the market, you can argue, it's 3 pushes down, 21, 25, 28, and then a failed breakout below the wedge on the 35. What do you do on 35? Do you sell the close? Not really ideal. 50-50 chance in general. It's a failed breakout below a wedge, and there'll be more buyers below. And if you go back to if you remember this bar, it went straight up on the next bar. So price could only go maybe a tick or two below the close of 35, and that is a sign of weakness by the bears. it means that more traders were interested in buying close to 35 than selling. 37, strong bull close, testing the moving average, testing the highs of 25. It's possible second leg trap with 33 and 37. Is it a buy the close bar, sell the close bar? Well, it's testing the moving average, and it might be more sell the close than buy the close. And that was another, I want to say two things, because I thought it was a pretty interesting scenario, and it's a good reminder. Whenever you get a second leg trap, I bought here, and I made a mistake getting out down here. And I was trying to show an example of trade management. And the point I'm trying to make is when you have a second leg trap, and it was a dumb trade because I took the trade in an actual account and I had a pretty wide stop. I bought a little bit down here, scalped out a little bit, bought a little bit again, scalped out on the way up, bought more again, had a really wide stop, and then took all off way up here. But I did not use the right stop here, and it really wasn't the greatest trade to show in the webinar because I don't think it's not a realistic trade for most traders to take. It is because you have to trade really, really small. I mean, you really have to have the ability to risk far more than, for that trade. I know I wasn't risking anywhere close to, I was risking less than, maybe 40 basis points, maybe less than that. So I was trading really small in that trade. But the point I want to make with that is it was dumb to get out there because when you get a second leg trap, the odds are really high the market's in a trading range most of the time. Sometimes it can be in a channel. But the point with that is there's buyers below these bars. And that means the market's going to go more sideways than straight down. It's also testing the bottom of the channel. So it's kind of dumb to get out right there. But nonetheless, 2 legs up, always in bulls, exit below this bar. If they bought here, they get out below there. If they didn't get out below there, they get out below here. 3 consecutive bear bars. Is it sell to close? Not really. For the reasons I stated earlier, just a minute ago, 2 legs up, bottom of the channel. It also might be the third push down. 1, 2, and 3 in an expanding triangle here. Expanding triangles are basically the reversal attempts. They're attempts to make the market more of a trading range. Most reversals become trading ranges. Therefore, most traders should take profits down here. Bull bar, so traders sold the close, and then they got bad follow through on 41. Disappointment, probably buyers below 41 and 42. And you can see 42 went outside up. 43, if you remember, it spent the majority of its time as a bear bar, as an inside bar. And then in the final minute or two, it reversed up, forming a bull bar. Is 43 enough to make the market always in long? Is it follow through with 42? Not really. This here is not enough to replace this. Therefore, most traders would in fact wait for more information. You can buy here, but you really need a wide stop. Too much risk, you may get a small second leg. I still think the target is somewhere up here. It was reasonable to buy the 46 close, just like it was reasonable to buy the 18 low. And let me back up. It was more reasonable to buy the 47 close than the 18 low. But I'll bring that point up in a little bit. So traders that bought the 37 close here, since it was reasonable, if they buy more of a bull bar, say like right here, you can see the market came right back to their close, to their entry price. 44 or 45, 2 legs up, 42 being the first leg, and then pull back on 44, 45 being the second. Low 2 short on 45. Probably buyers below though, and it might be more of a trap than anything else. In general, if a trader is selling at the bottom of what's probably a trading range, they don't want the market to start to go sideways there. They want the market to break far below. So not really ideal. I talked about this in the room as well. If you did sell below 45, typically it's better to look to be quick to exit. So you sell below 45 and then 46 is the doji. you have to, think about the logic. Compare this cell here to this cell right here. It makes way more sense. This bar, if you sold below it, had immediate follow through. This bar, if you sold it, had pretty quick follow through as well. This bar, if you sold it, had terrible follow through. That is a warning that this may reverse, and most traders are better off exiting. And then 47 second entry buy. The bulls are trying to get an upside breakout of a bear flag. They see this whole thing as a bear flag. They want an upside breakout, tested a 38 high, and they got it at 48. 48, possible wedge top, 1, 2, 3. Big bull bar 48. What do you think the follow through is going to look like? Well, the follow through on 47 was bad. The follow through on 18 was bad. So probably bad follow through on this bar. Now, the only difference with 48 is it's closing far above the moving average, and that increases the odds that there's buyers below and the market will get a second leg. Here, the market barely broke above the moving average. And here, the market broke above the moving average. But after this, the odds favor a reversal down. Bear bar 49. Some bulls will put a stop one tick below the bar, and they'll hope that this doesn't trigger and the market gets a second leg. A lot of those bulls that did, some of them would get out as the bar turned up and started to stall, which is what caused the market to go down to here. This right here, though, is a warning. It's a small expanding triangle, just like this is an expanding triangle. We had an expanding triangle for a few bars on the open. This is a warning that even if we go a little bit higher, there's probably going to be sellers not far above. So it will disinterest a lot of traders from swing trading, and they'll be more interested in scalping out. Bull bar, a little bit of surprise on 53. Possible measuring gap, the 45 high and the 52 low. And there's also a gap here, the 41 high and the 46 low. So the bears that sold the 41 high, scaled in higher, tried to get out break even back to the 46 low. When it tests the 41 high, they got trapped and they gave up here. The bulls that sold this high, scaled in higher, trying to get out back to the 52 high, unable to get out. And some of them are giving up and the market's going higher. Now we have 3 pushes, 1, 2, and 3, testing the 37 high. Reasonable. Let me back up. The bulls buying here, which is not ideal, they're buying in the hopes that the market continues to form a measuring gap and that the market will break strongly to the upside. To me, more likely, this is the trading range. 52, 53 broke to the upside. 52 is a bad signal bar. However, 53 could not close above the 51 high, and 54 could not, close above the 54 high or the 53 high, so not ideal. 55 outside down, reminder that the market's in a trading range. It's complex tops on a smaller time frame. 2 legs up, leg 1, pull back leg 2 to 45, breakout above the flag, arguably reset the count. And then we've got 3 pushes, 1, 2, and 3. Now you have a complex top, probably going to get a couple legs down and test this breakout point. 56 is an important bar. It's a doji bar, and it's a bad second entry buy. Therefore, it increases the odds that there's sellers above. Some traders, when they look at 58, they will just sell the close, betting that there's going to be more sellers above and that the market will get a second leg down. And you can see it did right there. 59, an inside bar after informing a micro channel with 54. Is there buyers below 58 or sellers below? Probably buyers below. However, tight trading range, and the buyers may not come in until the market gets to the 48 low. 50, breaking below 57, 3 pushes down, 55, 57, and 58, probably buyers below, and at least a second leg up. It's a wedge, so probably 2 legs up, but a micro channel, so it's minor. Surprise bar on 61, but it's bear breakout below bear flag in a trading range day. Therefore, this could easily be a trap and a sell vacuum. Tested the 41 high which it was, and tested below close of the day. So there might be more buyers down here than sellers. 62, bad follow through, and then you can see quick reversal up on 63. A lot of traders, I think this is a bad short for one. And if you did take this short and then you see the bad follow through, it's really dangerous to hold, because if this is a second leg trap, which is arguably kind of a variation, we have a wedge, 1, 2, 3, so that's leg 1, bear breakout, leg 2, and then bulls. Bears obviously gave up here, so not ideal. So bull breakout, 63, follow through, 64, probably buy the close and going higher. You can argue 62 was a higher low major trend reversal. You had a wedge bottom, 10, 28, 40, leg 1, and then pullback. The pullback of any wedge is always a head and shoulders bottom, which is a higher low major trend reversal. And then you got a second leg up. And I mentioned right here, at one point, I said that, excuse me one second. Anyways, at one point I mentioned how this is probably the first leg of a complex 2 legs up after a wedge. So when you have a big wedge and then you get a wedge top, so you have a wedge bottom here, let me just draw it, like so. And then you see a rally that's arguably 10 bars and 2 legs. You always want to compare the size of the wedge. How many bars is in this wedge compared to the correction? And if there's a big difference, then that will increase the odds, that will increase the odds of the market. There we go. Of the market. There we go. That will increase the odds of the market having to have a second leg up. So leg 1, pull back, leg 2. So what do you do on 62 or 63? Can you buy it? It is a buy the close bar, showing a surprise, second leg up likely. What about 64? It's testing the 60-minute moving average. It's also testing the midpoint of this rally. This rally was tight enough channel that there probably should have been buyers below. And you can see, I can do this right, the market is testing that area and it started to go sideways. So buy the close 64, bulls will buy it, scaling lower, and when the market starts to go sideways, they'll be disappointed and scalp out. And more or less the same price action we've had all day. Continued disappointment. And at this point, reasonable buy here, bad follow through on 65, so high one buy on 66. But it's a doji, and this bar tells you that a lot of traders that bought the close of 64 and scaled in lower are getting out break even here. And then bull bar 69, bad follow through on 70. You can call it triangle, possible final flag from the rally on 63, 64. Market broke to the upside and tested back in this final flag here on 71 and 72. And then the market drifted sideways, forming a wedge and tested the moving average. It's kind of like it's similar enough, I'll show it. It's kind of like the euro dollar. And I talked about how, click on that, go to the daily chart. I mentioned how it's a little bit extreme, but it still works. You get basically you get a breakout and follow through, and you've been in a trading range for a while, and you're starting to go sideways, you're drifting up a little bit. In this case, the bulls did get a measured move, but when you're far away from the moving average, at some point you're going to have to touch it. So a little bit extreme, but overall same logic. The bulls did not get a measured move, but they started to go sideways, couldn't touch the moving average, and eventually the market had to touch the moving average. What about buying on 72? It's a reasonable buy, betting on a double bottom, and if you do buy it, you're putting your stop below 72, and you're hoping for a sharp rally into the close. And when the market starts to go sideways, you just exit. For stop entries, the single best stop entry of the day is probably 19, selling below 19, and probably selling, 38. Hard to do, but it's reasonable. And then buying above 63. I think 72 is challenging with being late today. So let me talk about always in for a second. So bar 2, is it always been long? Might be, but with the micro channel, since 72, possible parabolic wedge, and the bulls not having consecutive strong bull bars, the bulls probably need one more bar on bar 3 to make it always in long. 4, always in short, sell to close. Those traders probably get out. Most of them get out. I think it's reasonable to get out above 14. And if you do, you have to get short again below 19, 20, 22, or 21, still sell to close. And you don't have to get out here. I think it's reasonable. Some traders will. I think most traders get out above 36. And the traders that did, if the bulls bought above 36 or bears that got out above 36, bulls get out below 38, bears have to get short below 38, and bulls for sure get out, bears for sure get out above 46, bulls probably buy above 46, or bears have to get out above 45 for sure, but I don't think that's a great short in the first place. 48 are always in long, arguably, and if you don't get out, break even somewhere in here, probably have to get out, I don't know, maybe below 58. I think it's more ideal to just get out maybe below 56, but tough call, not really a good place to be short up here. And 63, always in long, so bulls, I would get out above 62 if I was a bear. Bulls, they buy above 63, and they don't have to get out below 70. For me, I probably would, and maybe you buy again above 72, but I don't like to trade always in a tight trading range, so not really ideal. For limit orders, probably the first reasonable limit order is buying 12 low, and then other than that, it's looking for selling the high after second leg, so leg 1, pull back, leg 2, pull back, and then break out above leg 2, so selling this high scaling in, but hard to do. And the reason it's hard is because when you're selling, you see this. And, same thing with, this is the same bar I'm talking about. So if you're selling, you see a big bull bar, and this bar happened in, like the 4th minute of the bar. So it didn't this bar didn't close and immediately go up and reverse down. It spent the majority of the bar as a bull bar before it turned down. And probably sellers about 22. And buyers below, I don't know, maybe buyers below 45, but hard to take that trade. And probably buyers below 65. Buy the close, sell the close, sell the close 4, 5, 6. You can sell the close 7 and 8 if you want. Is it sell the close 9 and 10? It is, but pretty dangerous. Possible parabolic wedge 1, 6, and 10. So if you do sell the close, you have to be really quick to manage the trade, so not really ideal. And what about 18? Is it buy the close? If anything, it's probably sell the close. Sell the close here, stop, measure, move up, betting that the follow through is bad. Sell the close 20, sell the close 21. Same thing here. Probably, it's really the better sell the close bar than buy the close bar. And same thing, you sell the close, stop, measure, move up, betting that the follow through is bad. And you can see bears tried to do that again here, and then sell the close, yes, but not really ideal. Sell the close here. Bears tried to do the same thing, sell the close on this bar, stop, and measure, move up at the bar, and it went sideways more. and they bailed out of the trade. And then probably buy the close 61, buy the close 63, 64, and sideways for the rest of the day. So let me look at questions. Is this a cup and handle pattern forming on the daily chart? So is this a cup and handle trend day tomorrow? You know, I don't really see it. I mean, I get the logic to a degree, but you know, for me, I see it. I try to think of it more simple than that. I see it as a tight trading range, and for me, if I look at this bar, I always try to do this. What would the always then traders do? What would the swing traders do? You know, would I sell below today's bar? No. Therefore, there's probably more buyers below today than sellers. Just like there were more buyers below yesterday, Friday, this bar right here, than sellers. So, to me, tight trading range, probably going to continue to go sideways. I still think we're going to try and get up to this area, the December the 6th low, which is right here, and probably try and get to the 4,000 big round number. You know, this is, I talked about this in the blog. It's possible this is a wedge bottom, 1, 2, and 3. 3 pushes 1, 2, 3. The shape isn't great, and if it is, some traders will see this as the first leg, pullback, and then the second leg. So in other words, leg 1, pullback to leg 2, which takes you up to the 4,400 area. The bears want a downside breakout, and they want this to be the wedge. So 1, 2, and then 3. And then they'll try for 1 leg, pullback, 2 legs. So if you think about that, I'm just guessing here. I don't know. But either way, I would keep it more simple. Tight trading range, breakout mode. Bulls want a higher low, test the 4,000 in the December highs. Bears want a downside breakout and test the November lows and possibly the October lows. But if they do get down there, probably buyers below. You know, if we look at a monthly chart, you can see that probably the bears want some kind of double top, but with this much buying pressure, probably buyers not far below in the second leg up likely. Okay, hope everyone has a good night.